All right. Hello, everybody. Welcome back to another episode of the Market Close. We are here today, Thursday, February 6th, 3:41 p.m. I am 4 minutes early. And you might be wondering, hey, wait a second a minute. That's rare. How are you 4 minutes early? Well, I thought I'd show up a couple minutes early, simply because I've been staring at the same exact thing you guys have been staring at for the past couple hours. And look at that. I didn't even know we were at 109.9. I thought we were still at 109.4, but I guess I went live right in time to be 3 cents away from 110. I don't know what to say. I mean, I don't know if you guys know what to say. I don't know what to say. But I've been staring at this thing for the past 20 minutes. I was like, you know what? I probably should go live because I'm sure some people are probably a little curious about what's going on. Unfortunately, as much as you guys trust me as a source, I can't really be a source because I can't explain what's going on. The only thing I can explain right here, and I'm curious what everyone else thinks, volume's 107 million. We added 50 billion in market cap in the past 4 days. Palantir now $250 billion market cap company. I think the big boys are buying in. And they've already been buying in, but at this point, either it's just tens of billions of dollars of retail capital, or it's some big boys who really don't care about the valuation and they just care about getting exposure to this name. Other than that, I really can't explain it. I mean, up another 8% today. Palantir's up 40% for the year. And we are up basically 35% since earnings. So it's incredible. It is absolutely incredible. For those that are joining, thank you for being here. We got a lot to talk about. We got Amazon, we got Pinterest, we got Affirm, Elf, Cloudflare, so many names that we got to look into. But we have Palantir as well, 109.97. Let me show you guys resistance at 110. I actually didn't check myself, so let me see. At 110, 282,000 shares. 282,000. So that's what we're looking at to be able to get through this. In the morning, we were at $100. Like, this is like basically a $9 move throughout the day. It's not a short squeeze either, guys. I mean, like the short flow, it's less than 4%, less than 5%. It's like 4.5. So I don't think it's a squeeze. I mean, maybe there's some level of squeeze happening here, but I think it's, as what Dan says right here, retail's not selling. And as a result, more and more buyers are coming in. It is crazy, though. It is wild. I will agree. I mean, it's something I don't think anyone expected. It's happening. People on Twitter, again, I told you for the past couple of days, they've been freaking out. They are still freaking out, but it's here and it's happening. So it's pretty exciting. Thank you, everybody, for being here today. Marcus, Sarath, Polly, Dragos, Kirk. Thank you, everyone, for being here today. I don't think Steve can call in right now because he's hung up in meetings with lawyers, but I did talk to him today, and he said the same thing that you guys would expect him today. He's getting ready to write a very big check to get out of these covered calls. And he's probably going to do it next month. He called me to ask if he should do it immediately. And my answer was, I mean, you can if you want, but he was worried about the shares getting called away. His strike's at 40. He has 2 years left on the covered call, or a year and a half. So if your covered caller is in January 2026 and your strike is 40, could you get called away? Yes, but the extrinsic value is still so strong on the contract, given there's a year left, that I don't think you should be worried about shares getting called away. What you should be worried about is the stock keeps running up and the bill keeps getting higher and higher for you to roll the contract. But in terms of it actually getting called away, I usually that happens a couple months before or a couple weeks before, not really a year before. But nonetheless, it is going to be a hefty bill unless Palantir takes a breather, and Palantir is deciding to not take a breather. 109.95. We got 5 cents, folks. We got 5 cents. We got 5 cents for 110. Let's see if we can do it. Let's see if we can do it. Leduc says this is not healthy. I'm not going to disagree. Obviously, a stock going up and up and up doesn't always have the healthiest ring to it. However, I mean, was it healthy for Palantir to go up 400% last year? Probably not, right? So it's just like, if it's going to be re-rated and there's going to be new investors coming in, new classes of institutions potentially coming in, then that's not something we can fight. You can analyze it. You can complain about it. You can sell the stock if you hate it. You can sell covered calls again. I mean, you can do whatever you want to do. But I think one thing you can't say is that it's not happening. And so it is what it is. It is happening. And then if you really hate it, then you make your decision. But if not, this is what we are seeing right now. 109.93 right here on Palantir. NVIDIA, let's take a look around the room and see what else is going on. NVIDIA is also getting a nice pump, 128. An hour ago, everything started dipping. Oh, we're 1 cent away. Everything started dipping, and people were saying the non-farm payrolls got released, even though that wasn't released yet. But that jobs data tomorrow is going to be also very important to see kind of how the market holds up. We got very close, 109.99. Salesforce is down 5%. Roblox down 11. AMD down 2. Amazon's up 1%. We got big Amazon earnings today. NVIDIA's up 2.72%, 128.25. It would be hilarious if NVIDIA goes back to like 135 before earnings, and then 115 to 120 was our August 5th moment that lasted for 5 days instead of 5 hours. So that would be nice. Also, if Amazon says they're spending a boatload on CapEx, that could be another catalyst for NVIDIA today as well. So NVIDIA really getting some momentum, and whoever bought the dip, congrats, it's done well. I did buy another 100 shares of Robinhood today, so bought some more Robinhood at 53.20. S&P right here, 605, Robinhood 53.14. Oh, we got an update on Robinhood, by the way. They are doing their investor Q4 call in video. They're doing it in video. You got 110 on E-Trade. I don't see it on Webull. I don't see it on Robinhood. Some of you guys might have seen it. I have not seen it yet, but we should see it very soon if some of you guys saw it. But yeah, Hood is doing the video call, the earnings call in video, and Vlad did a video about it, and I'll share that in a second. 110, I still see a wall, 287,000 shares. I haven't seen it yet. Some of you guys might have seen it, but I did not see it at all. I did not see it. Yeah, still 109.99. Yep. It's only 1 cent though, bro. Come on, let's see. That's so weird that Fidelity shows it, but like other brokerages don't. I always thought it was like universal, but I guess it's not, because I guess, you know, stocks have so much volume coming in and brokerages show them in different ways. Bid-ask spreads are different. 110 was on IBKR. I think we got to see it we got to break through 110 to really say that we got 110. Because I definitely didn't see it. Webull's not showing it. Hood's not showing it either. Amit, that's arbitrage? Yeah, that's true. That's arbitrage. Your sister's going to call you again. Yeah, she probably did. This is wild, bro. Let me just say, this is wild. It is like almost getting, it's like it's being desensitized. Like, what's the dip? 100? 100's the dip now? Is the dip 100? 100? Like, is the dip 95? Is the dip 103? It's wild. It is absolutely wild. It is crazy. But it's happening. But it is indeed happening. We have so much to talk about after the bell, but I had to go live early because I'm like, well, this is happening. So this is probably a little important. But then Amazon's going to be important as well. Amazon's going to be important as well. Damn, a bunch of you guys saw 110 on Schwab and Fidelity. I didn't see it. Yeah, there's still a wall on. I mean, I'll show you guys right here. There's still a big ass wall. Look at this. Look at this, bro. Look at that wall. That has not been broken through. That's at 110. Ignore my phone not being charged. It's never charged at this point. But I don't know. Hasn't broke through yet. Hasn't broke through yet. Okay, so while we're waiting, let me show you guys the quick video from Hood. First of all, I love this move. Why? Well, it's ironically, we were talking about Robinhood having its Palantir moment this year. And what's one of the things you do to get a Palantir moment? Well, you actually make your earnings calls exciting, like people care. So let me pull this up right here. And we'll take a look at this real quick, and then we'll get back to it. Dude, see, I want to watch some, but we are so close. I can't leave. Oh, it's 1 cent away. Come on. 1 cent. Let me ring the bell. So at least we don't have this anxiety of waiting for it. Come on. It's 110. There we go. There we go. Palantir Technologies, ticker symbol PLTR. You will never forget those 4 letters, $110. Congratulations, everybody. New all-time high. $110. It makes sense that it blew right through, because if a bunch of you guys on other brokerages were seeing the 110, that just means there was probably like a little bit of a backup on Hood and Webull. And then once it broke through, it immediately broke through. So yeah, it makes sense that you guys saw 110 early and mine was a little delayed. Well, you guys know what's better than 110. Let's see the resistance at 111. I mean, why not? This is America. We want more growth. We don't complain about abundance. So why not? Let's get some more. 111, 26,000 shares. 26,000 shares. That's not too crazy. All right, let's bring on a guest on the show that is going to be covering all of this with me, particularly for Amazon. We'll get his quick thoughts on Palantir as well. Congratulations to everyone, $110.70, which is 30 cents away from 111. Sam, what's up, brother?
Did you do that? I know someone here definitely took down that wall and bought like $100,000 worth of shares on freaking Palantir. You know, someone here did do that, man. You got some rich friends. It wasn't me though. I wish it was me because I wish I had that kind of cash to throw around, but I don't. That's insane, dude. It's insane.
So Sam's going to be with me, guys, throughout the show. He has 20% of his portfolio in Amazon, so we're going to get a lot of good analysis from him. Before we talk about that, Sam, what is your reaction to what's happening with Palantir?
I just told you, there's a whale in your audience who just pushed that over 110. There is a whale here. Is it Peter Thiel? Is it you? I saw you bring out your phone, so maybe you just did that. I don't know. Someone did that. Someone here did that. Who did that now?
How do you explain with Palantir being the, I think in the top 30 companies in the world in terms of market cap?
I think there is something that's going to happen. That's going to be announced, probably some sort of huge government contract that hasn't really come out yet. But I think the stock is pricing that in. It doesn't seem like this is like a GameStop or anything, because for one thing, it is $250 billion. Yeah, $250 billion, which is technically mega cap status. But I would not be surprised if we hear that maybe they're going to be the backbone of the new AI technology for all the three-letter agencies. Dude, if that happens, like, we're going to know why. We're going to know why.
Yeah, I mean, look, you have a hell of a point. I didn't even think of bringing that up, but there may be an acknowledgement by the investing community, whales, institutional investors, whatever, that really do believe Palantir is about to be getting tapped on the shoulder for Doge, Trump, etc. And maybe that explains it, right?
Yeah, we'll see. It'll save them a lot of money, and that seems to be the going initiative. So, I wouldn't be surprised. That I wish I would capitalize off it, but I would not be surprised if that happens. Because let's be honest, dude, this is crazy. Like,
no one thinks the valuation is not crazy.
There's no formula that's going to justify this. Even the analysts on Wall Street are projecting earnings in like 2030s for today's valuation. Like, I'm not saying that it shouldn't be here or whatever. I'm just saying, like, there is something that's going to come out probably that's going to explain the reason why this is happening.
Yeah, I feel you. Thank you, Andy, for the $20 super chat. Appreciate you, brother, and appreciate everyone who has been along for this ride. Real quick, we're going to listen to Vlad just announce the new earnings call setup, and then we're going to get into Amazon. Here's what Vlad posted a couple hours ago.
Hey, everyone. Vlad here. I wanted to tell you, first of all, we love our retail investor community. We got some feedback on prior earnings calls that maybe they were a little bit dry. They could be a little bit more engaging to listen to. And we took that very seriously. And so I'd love to announce that we're doing a live video earnings call for the very first time. So you'll be able to see Jason and I and also Chris in the flesh, updating you on the state of the business and also answering some live questions. So that'll be live streaming on X, on YouTube, and of course on our investor site at investors.robinhood.com. February 12th afternoon. Hopefully see you all there.
I think the reason they're doing this is because they're recognizing that there is a retail community that obviously is also passionate about Robinhood, and they are replicating Palantir. And did we hit 111? Well, there you go. We have officially hit 111.
That's amazing. I mean, the whole market's rallying into close. So, wow, that's
yeah, Sam. So, what do you think? I asked your thoughts about 110. Now, what do you think about 111?
I don't know. You're already talking about 111. I'm talking about 112 right now. Like, I want to know what's up with 112. 111's old news. That's like 2 seconds ago, man. You gotta keep up with the times.
Well, you know what's better than 111? It is 1 freaking 12. That is 52,000 shares away. 52,000 shares away.
Hey, shout out to the OGs out there thinking of 112. Peaches and cream. Let's go, baby.
All right. So while we're staring at Palantir, give us a little bit of preview on Amazon. What are you expecting today?
Oh, dude, I don't really, if I had to guess, Okay, I have puts. I have puts on, but that's because my position is so big. I have to have some protection, right? I mean, if it goes down, it's not really going to protect me that much, but at least it'll ease the pain just a little bit. But I mean, Amazon was really never like an extremely fast growing company. I mean, for a $2 trillion plus company growing at 10%, that's no joke. But AWS is definitely going to be the numbers everyone's looking at. People are going to want to see it in the 20%. They reaccelerated to 19% last quarter. We get in the 20%. It's to the moon for sure. It's to the moon. I'm looking more at the operating margins. I want to see operating margins for AWS stay around 38%. If we see it around there, that'll be great. If we see it expand, that'll be better. But I would not be surprised if that comes down a little bit, maybe down to 35%. We'll see. I think the one that everyone is really going to be looking at as well is the guide for CapEx, right? So are they going to increase their CapEx? Right now, they're at 97 billion for this year. So if they come in more than that, I honestly don't know if that's going to be bullish or not. Like, if the CapEx is higher, then I think for Amazon, that'll be bullish because they do create their own proprietary chips, kind of like Google does at the TPUs, but these ones probably have way higher margins, and they're used a lot more in terms of their compute. So I would perceive that as bullish, but I can't guess for the market what's going to happen if that does go up. But we'll see. They're probably going to say that in the earnings call. Yeah, I mean, I think that's really what I'm looking for this quarter, keeping it pretty simple. But we'll see. It's 11:50. Oh my goodness, it's crazy.
Yeah, I agree with all your thoughts. This was so funny. Sam and I planned the show, and we were going to do an in-depth Amazon preview. And then, I'm sorry, Sam, but
this is it.
It's what can I say, right? This happens in everyone's mind.
What can we do?
And thoughts are on Palantir now. Yeah, I mean, look, guys, I think we're going to close above 111. We have 3 minutes left. I do agree with you, Sam. I think the international operating income margins are going to go up. I think that the overall operating margins maybe are above 11%, which would be amazing. If they touch 12, that'd be incredible. And then AWS, I think it's picking up the slack from GCP and Azure. But the stock is at all-time highs, right?
Yeah, it's at all-time highs. And I would say that last quarter, it was a very good chance that it was going to rip up, and it did, right? But like this quarter, it's just the valuation had I feel like the market has already realized Amazon's potential, and they kind of priced that in ahead of time. It's sitting at all-time highs, and certainly this stock was never cheap. It was always one of the expensive mega cap stocks besides Tesla. You can't really measure Amazon on price to earnings basis. Like, it's always going to have a crazy valuation for that. But I mean, their operating margins are pretty crazy for AWS. So if they keep that steady, international, I do expect international revenue for e-commerce to grow, mostly because of the just the growth of all the emerging markets as well. Because I know Jassy's really focused on expanding the emerging markets for Amazon e-commerce, and which is really good because Mercado Libre has been doing really good as well, and that's kind of reflected on like how everything else is going. We also saw C Limited doing really good in Southeast Asia. We'll see what happens with that, but I don't know. Like, can you just like smack me in the face? Like, I'm a little concerned about what's going to happen this quarter in terms of how the market's going to react.
Oh, I got to do the pump or dump. Oh my gosh, I didn't do it. We got a minute until the market closes. Amazon pump or dump. What do you say? You got to pick one.
Yeah, I think it's going to dump.
You think it's going to dump? Why are you such a bear?
I have to be realistic here, right? Like, when you put in the macro in perspective, how far the market has ran so far, it's super extended. Anything the market can scrutinize Amazon for, it's going to freaking take it, right? Like we saw with Google. Google actually had really good earnings. I don't understand, why it was down almost 10% after hours. Microsoft, I mean, that was always high valuation, but I think like that 12% swing after hours was pretty crazy in terms of its CapEx. I mean, I don't know. AMD is getting sold off. I don't know why AMD has gotten to this point. It's just.
All right, we're getting into the close right here. We are at 5 seconds away, and then we will get into all the earnings juiciness of tonight. Ladies and gentlemen, it is Thursday, February 6th, 4 p.m. The stock market is now closed, and Palantir is closed above $111 for the first time in history. 111.28 after hours. NVIDIA ends 128.68 on the bell. Tesla 374 got a little bit of a recovery. I did buy some Tesla at 367 today, bottomed at 363, now here at 374. Alibaba 100, SMCI was up 7.46%. You got Eli Lilly that was up 3%. Robinhood was down about 1.9%, 53.17. Affirm has earnings today, 61.75. PayPal was a bit down today. Shopify was down 3%. Netflix was up 0.45%. Grab was up 2.74%. Sam and I will be talking about Grab in a little bit as well. Rocket Lab right here down 3.2. Palantir 111.28. And now all eyes are on these companies that produce earnings. Pinterest, Affirm, Elf, Cloudflare, and Amazon. Are we red already? We are red already. All right. I guess the numbers are out.
Dude, I feel like this is
out
again.
I guess. Well, the puts are printing, right? There you go. The puts are printing.
I don't want the puts to print though. This is bad.
Dude, this is nasty. Down 5%. Dude, it's been like this is the earliest I've seen a big tech dump as soon as earnings came out.
We were talking. We thought it was going to be at like 4 or 5 or something. It's like they couldn't wait. They couldn't wait.
They couldn't wait.
Man.
Keep an eye on the poll. The poll is 67% pump on Amazon. We have to see once the dump overtakes the pump. That's how you know Amazon's definitely dumping.
This is this. I'm glad it just made its move down first and didn't pull a PayPal with that quarter you guys had with Amazon with Adam. Like,
yeah,
I didn't want to see this thing go up 5% and then come all the way down in reverse. Like, at least it just goes down now. I'm like, that's it.
Let me try to get the Amazon results. If anyone has them in the chat, let me know.
This is gonna be a red day tomorrow.
Well, I got covered calls that are gonna print, so that'll be nice.
Right,
I have covered calls at 255. I felt like that was fair enough, which seems like it is. All right, we got the numbers.
Oh, you got it. Go for it.
Here we go. It's a double beat. 186 versus 148. Are you kidding me? That's a 40-cent beat on EPS. The street's selling that off.
No, that's EPS. I don't really.
I mean, there's probably something with margins or guidance there that we got to look at. But 187.7 versus 187.2. I mean, a very slight beat on revenue. But it's a beat on EPS. 40 cents is not bad. Let's see what the other numbers are. We are down 5.3. So it looks like something they said the street does not like at all.
Says AWS net sales missed guidance.
Why are these cloud companies missing?
Yeah, I don't know, dude. I don't know. That's net sales. So that's at least someone's got a one pager here.
Does Brett have it? Does he, or not Brett? Brad? Well, dude, no, this is not a miss. Hold on. This is a bit. I got the cloud number. This can't be the street getting it. 28.79 versus 28.82. That's what the street is upset about.
No, but dude, with these cloud companies, if you don't beat guidance at this valuation excessively, like, you're done.
That's fair.
Did you see ServiceNow? They were down 10% and they were basically flat. Atlassian beat it by a wide margin. They're up 30%. Like, this is how the stuff works. I mean, it is recovering a little bit though, so that's not bad.
So you can't miss by even 30 million at these valuations, is what you're saying?
Not at these valuations, you can't. Especially a high growth stock like Amazon for a mega cap. Like, you cannot miss. You cannot miss.
I am looking for CapEx numbers. I don't have them yet. They might do it on the call, but I don't see the CapEx numbers yet.
They usually do that in the call. You could see last quarters on their website. I actually didn't even check their website yet, so let me double check here.
They didn't announce they didn't put the earnings on the website yet, so we're still waiting for all the numbers, guys. Let me see if I can get some other coverage on it.
Some of these people are tapping into Bloomberg. They're able to see those numbers ahead of time.
Yeah, looks like cloud, guys. Looks like cloud is what's getting here.
Guidance for Q1.
How bad?
They're estimated to be for Q1. This is the whole company revenue, 158 billion. They got it for 151 to 155.
Street wanted 158.
Yeah, that's what Kaushik said. We got to wait for that. We got to wait for it to print on the website.
It's getting a little bit of heat back. 5%.
Yeah, it's getting back. That's good.
That's not horrible. I think we got some coverage here on Amazon. Here we go.
Stocks under pressure. Kate Rooney has the numbers. Kate. Hey, Morgan. So at least for the quarter, it was a healthy beat here on EPS and revenue for Amazon. That EPS number coming in at $1.86. That was better than expected by almost 40 cents. Revenue of $187.79 billion. Stronger than expected. And then that AWS revenue number, that cloud sector, 19% growth. That was the number the street was looking for. So right in line there. We're going to keep digging through the numbers, though. We'll bring you more. You can see stock down more than 5%. So.
All right, we're still waiting for the rest of the numbers. At the meantime, guys, ELF is also getting a little schmacked right here, down 10%. You know, this has been a tough one for the past couple of months now.
I'm kind of surprised. Like, that thing already came down a lot. It's going down even more.
Yeah, it came down already, and now it's getting hit even worse. I don't know. Street.
Could be a Celsius moment, dude.
Could be, maybe. Net sales 10% year over year on revenue. International is up 8%. And then AWS 19%. I'm waiting for the operating margins, but we got to wait till they post that, because that number.
Okay, 19%. 19%. International is up 8%. Okay, that's international. What about advertising? Where did that guy see that numbers? Did he see it on Twitter?
They're saying it's in the press release. Let me go here. Do I have it? Oh, I have it. Okay, perfect. All right, here we go. We're gonna get to CleanSpark and Pinterest and all that stuff, but let's go to Amazon. Let's just try to get to. Oh, by the way, Pinterest up 13%. There you go. So Pinterest up 13. Affirm's up 5. That's great for the consumer. Nice to see that. Elf's down 9. Cloudflare is flat. Fortinet's up 4. Cybersecurity. CleanSpark's up 3. Amazon is down 3.3% currently right now. Okay, here we go. Numbers. AWS 19%, North America 10%, international up 8% year over year. Operating income $21.2 billion compared with $13.2 billion. That's a hell of a year over year increase. Obviously easier comps, but still. North America $9.3 billion, international $1.3 billion, AWS $10.6 billion. AWS did more net income or operating income than the entire North American business. So that is incredible. Net income increased to $20 billion for the fourth quarter, same as or $5 billion less than Google, or $186 per diluted share compared with $10.6 billion. So they doubled it basically year over year. Okay, I need to see the margins. Operating income. So
advertising slowed down from 19 to 18. That's a high margin business.
Well, dude, it looks like they beat on they got 11.3% on operating margins. That's
a worldwide net sales.
Yeah, but that's the overall Amazon operating margin number that I was looking for. I mean, last quarter this was a big quarterly beat, right? 11% versus 9.9%. Because look, they were flat for the past 2 years or past 5 quarters. Then they beat by 10.7%. That was big. Then they went down 9.9%. That was bad. Then they beat 11%. Now they're at 11.3. It's not a big beat, but at least it's better than.
Yeah. AWS operating margin came down from 38.1 to 36.9. So.
Oh, that's not good either.
Yeah, I mean, they went from 32 to expected at 38 last quarter. So a 1% hit isn't that bad, but you know how the market is.
Yeah, but it's actually kind of impressive that AWS margins went down, but overall operating income margins went up. I mean, like, I guess there's other parts of the business that got more efficient, even if AWS didn't. I'm going to get Affirm numbers, guys. 1 second. We'll take a look at everything else. We got the Amazon call in about an hour. And Sam, you're going to listen to that with me on this one?
Yep.
Okay, cool. So Sam will be with me here and we'll be listening to that. Affirm has a double beat. So Affirm's profitable. Wow. Shout out to Affirm.
Yeah. I know a lot of bulls on that one. I think Tanner, he has Affirm, right?
They became profitable. That's what, I mean, the street wasn't expecting it. They wanted -17. They brought in 23, 866 versus 807. That's a hell of a beat on revenue. 50 million, not bad. Affirm should be up. Affirm is up 7%. Yeah, that's a good print. Now, Pinterest. Why the hell is Pinterest up 25%? What is going on there? Pinterest has Fortinet, by the way, a double beat. Pinterest actually missed on EPS.
Oh, Fortinet reported. I didn't even know that.
So Pinterest, yeah, it's a great sign for SoFi as well. 56 cents versus 65 cents. That's a miss. Revenue 1.15 versus 1.14. These numbers are not impressive at all. So something they said in the guide is getting the street to pump at 25%. And I don't know what that is. Amazon still down 3%. Fortinet now flat. CleanSpark's up 3.1. ELF 13%. By the way, today I found out ELF stands for eyes, lips, and face.
You didn't know that?
Dude, I had no freaking clue why they named the company ELF, and I was looking for the logo for the thumbnail, and I was like, oh, eyes, lips, face. I didn't know that. So I found that out today.
I was actually quite bullish ELF for a while, and then I stopped myself out, but it's kind of a shame that it's all the way down here. Like, I thought it's definitely pulling a Celsius. Like, the growth stock is no longer growth stock anymore.
All right. Well, here we go. We got ELF.
6 1/3. 74 cents per share. Company missed on revenue expectations, reporting $355 million for the quarter. But the most significant development comes from the revised outlook. Management has cut full-year guidance, with the CFO citing weak January trends. The CEO told CNBC's Gabby Fong-Rouge there was heavy discounting during the holidays and a slowdown in, quote, social commentary online.
Wow. Huh? People aren't talking about e.l.f. beauty. For those that know the e.l.f. story, when it was $8, they used influencers to like grow the business by like 1,000% in terms of top line growth, or like 300, 400% year over year. I guess they're using that as a metric to explain to investors why they're not growing anymore. People aren't talking about it on TikTok as much.
Amid TikTok ban concerns and the wildfires in LA. The lower guidance really just marks a dramatic shift in sentiment. Just last quarter, there was strong demand, and that prompted the company to raise its full-year guidance. So this sudden reversal in outlook has really sent shares plummeting down almost 10% right now. Morgan?
Yeah, shout out to Chris Camillo. He wasn't short e.l.f., but he wasn't happy with e.l.f. because he was noticing that the social conversations weren't as strong. He was in the stock at 8. I think he got out like, I don't know, a couple months ago with a great return, but he was scared about e.l.f. trending on social platforms, and so he stayed out of it. You got e.l.f. down 16%. That's a nasty one. That is an absolute
That's
nasty
pretty
one.
bad. They're already down. I thought, did you see the 135 like a month or something ago? Like,
Yeah.
I thought that was it. They bottomed, and then now, damn, that's rough.
Yeah, I mean, they peaked at 221 back in 2024, so not too long ago, April. Palantir's at 112. Palantir's at 112 after hours. Palantir's at
Wow. That's where all the money's going to, man. It's going to Palantir. Palantir
Oh
and Preview.
my goodness. Oh my goodness. What is happening? What is happening in life? It's at 112.15.
It's so funny. It's an Amazon and Cloudflare earnings stream, and we're talking about Palantir. Don't expect less.
We got to ring the bell for Palantir at 112. Here you go. This is incredible. This is just incredible.
Dude, some of your viewers, their averages are pretty crazy. Like,
Dude, the people
single digits. It's crazy,
people bought
man.
this thing under $10. It is exceptional. It's exceptional. Affirm right here up 7%. Pinterest up 19. e.l.f. Dude, this is sad. 20% down. I mean, where's Ulta on this news? Ulta is okay. I guess Ulta's not affected. And then Estee Lauder already got hit. Estee Lauder, it's down another 0.42%. But
Estee what?
Estee Lauder.
Oh. Viewers, did anyone else catch that?
No, they didn't catch anything. That's how you say that.
Estee Lauder, man. Estee Lauder.
Estee Lauder. You know what? You stick to Amazon, buddy. Okay, stick to Amazon. 3.75%. Amazing, yes, amazing. It's not amazing today. You know what I'm saying? It's not doing well today. Okay, so what is your reaction to? I mean, like, is this acceptable? Like, what are you thinking about?
No, I mean, it's fine. You know, at the end of the day, like, I'm gonna scoop up more shares if it comes down to the 210s again. I'll scoop up some more shares for the long-term holding. I'm not really surprised. I did not gonna say I knew this was gonna happen, but there's a high probability this is gonna happen. Like, the market just needs a reason to kind of cool off a little bit.
Yeah, that is
don't
fair.
have CapEx on it, do they? I don't see any CapEx.
No, I don't see it on Twitter either. So hopefully we'll get Fortinet in a second, guys. Here's Pinterest.
Expectations 1.15 billion ahead of expectations of 1.14 billion. The company reporting adjusted earnings of 56 cents per share. That is not comparable to analyst estimates due to a deferred tax benefit, though the adjusted EBITDA did beat the street consensus. The company's monthly active users, 553 million, was ahead of estimates of 547.5 million, and average revenue per user of $2.12 was 3 cents better than expectations. The company also guided to first quarter revenue in a range of 837 to 852 million. That's well ahead of the 833 million estimate. And they say that this guidance does assume about 2 points of headwind from foreign exchange. Shares up 26% in after hours trading. Make sure to tune in tomorrow morning at 10:45 a.m. Eastern. I'll be sitting down.
Okay, Fortinet. So that's what we got on Pinterest. I still don't have a reason why Pinterest is up 20%. I don't think she said anything that made me understand why that's up. But
I saw a very big move on Cloudflare for a second. Yep, Cloudflare is down 6% right now. Trying to look up the numbers.
okay, so Fortinet, they got a beat, 74 cents versus 61 cents. That's a good beat. 1.66 versus 1.60 billion. on the revenues. Fortinet is a cybersecurity name for those that don't know it. That one's up 6.5%. I would imagine that means CrowdStrike and Palo Alto probably getting a little bit of, if not a bid today, at least some good investor sentiment, given Fortinet's numbers were good. Palo Alto's down to up 30%.
Cloudflare is down 10%.
CrowdStrike up 1/3%. Why is Cloudflare getting hit?
I don't know. I'm trying to look up the numbers, but this is another high flyer. Wouldn't be surprised that Cloudflare Q4 misses. Oh, they have a net. They missed the net loss estimate. Operating loss missed by a lot.
Hold on, 19 cents beats 18 cents, 459. So they beat on top and the bottom, but you're saying there's some other metrics that they're getting.
I don't know. I'm just looking at like one tweet. So to be honest, it's not up on their site yet, so I can't really confirm it.
Let me know in the chat if you are long any of these names: Cloudflare, Affirm, CleanSpark, Fortinet, Elf, Pinterest, or Amazon. And also, let's do take two, and then we'll go back to Cloudflare, and we'll look at that right now.
Hey, Morgan, they sure are out. And the shares are up here a bit despite a slight revenue miss. EPS coming in, it's actually a loss per share here of 71 cents, though. That is not comparable to estimates there, so we're not comparing that one. Revenue is $1.37 billion. Street was looking for $1.39 billion, so more or less in line, just a slight miss there. And revenue guidance for the fourth quarter, that's the one we're in right now, $1.48 billion to $1.58 billion. On the low, it's more or less in line, a little light on the guidance there, but still you see shares up 3%, and it looks like they're still on track. Everything that investors are watching here is that launch of the new Grand Theft Auto game this fall.
Okay, so Take-Two doing its thing, up 3%. Here's the Cloudflare number I think you're looking at. Q4 misses with net loss of 12.8. Oh, so they're not net loss?
No, they're not profitable. A lot of cloud companies are not profitable, but they were operating income, or they were EBIT profitable, which is good.
Yeah.
But I don't, this is the one I was looking at. I don't know if this guy's stuff is right.
Fast Stock News is usually right, I believe.
Oh, okay.
I mean, he tends to be right, but yeah, we'll confirm that. Oh, hold on. Cloudflare just reversed.
Yeah, they reversed.
Maybe that guy was wrong.
Whoa. Up 8%. That's good.
Hold on. It went down 10% to up 8%.
There you go.
A pretty aggressive move, dude. That's
Matthew Prince. Let's go.
Affirm's up 7, Pinterest up 16, Elf. Hopefully they can do a little bit of a Cloudflare right here. They're down 18. Amazon. I mean, you're not mad at down 3% though, right, Sam? It's just like, it's whatever. It's,
I mean, it's going to move the market. That's for sure. The Qs are down 25 basis points after ours.
Where's NVIDIA? Oh, Amazon citing FX as well. Yep. Amazon citing FX. Damn it. It's not the best thing for some of these companies.
Oh, they're blaming FX. I hate it when these companies do that.
Well, a lot of their revenue is across the world, right? I mean, that also.
Yeah, no, I mean, you kind of have to make the FX constant currency, but when they blame it on that, it's like, that's not good news.
Palantir after hours is 111.73. NVIDIA after hours down 20 basis points, 128.4. Amazon down 3. S&P is down 0.17, and the Qs are down 20 bips.
Cloudflare is up 11%.
Bro,
wow.
Someone manipulated that initial result, dude. There's no way. I mean,
it's a cloud stock, dude. It's a cloud stock.
That was a
this
quick.
Is how they move.
You're right. They do move relatively quick. Let me check CleanSpark, guys. Let's see their numbers. CleanSpark. Okay, I don't have their numbers yet. Let me go to their Twitter. They might have it there. CleanSpark is up 5%, though, I think. Am I right? Yes, up 5.97%. Okay, here we go. $162 million in revenue. I'll show this right here. 85 cents of EPS. They have 10,556 Bitcoin. It cost them about 34,000 to mine a Bitcoin in Q1, which I believe is one of the best rates in the industry. And they have a 40.1 operating hash rate. There you go. That's good enough to get it moving.
What does that hash rate mean? I don't even know what half these metrics are, dude.
Dude, the hash rate, to my understanding, is when you want a really good breakfast, you know, and you
knew you're going to make up some bullshit.
You go to McDonald's, they got the nice little $5 meal. You get a hash brown and The rate of the hash brown is a little bit cheaper if you get an orange juice with edges. That's what
I think anyone who's looking at the clean spark print is like, are my calls going to print or no? That's all I wanted to just let me know. Just let me know. That's it.
I sold Clean Spark at 16 in January 2024. Today is 1090. Bitcoin has doubled since then. That's all I'm going to say.
Yeah, I know. It's miners. It's miners.
It's miners. Amazon low recovery, Sam. 1.6% is okay. Down 1.6% is not wild. Where's Hoodie? Hood is up after hours, 53.40. Don't know why, but it's up a little bit.
I'm doing pretty good after hours. We got net up 6%. Amazon's down. Not a big deal.
Yeah, but 1.5 on Amazon's not crazy at all.
Yeah, it went from like 1.5 from like 10%, right? Wasn't it like the 220 or something?
Yeah.
I'll take that. I'll take that.
How many people, okay, put in the chat what percentage of your portfolio is Amazon? Because I would imagine there's some people that have pretty heavy percentages. Sam is at 20%. I didn't know that. That's heavy, dude. I mean,
it started at like less than 10%, and then I was playing the calls and stuff on it, so that added to the size. I always switch between the long-term calls and shares, but overall it's like 20% of the portfolio. So
that's a lot, bro. That's a
lot. It's a lot.
We got a lot of people here in the 10 to 15% range. A bunch of you guys are below 10%, but decent chunk of you own Amazon. We don't have CapEx number, guys. So at like 5:30, we'll probably get the number. That'll affect NVIDIA, Broadcom, AMD, and Amazon. And if it's heavier than good, well, what do you think, Sam? What's your projection on CapEx?
No, they're going to guide up. It's Amazon. They're going to guide up.
They spent in 2024. Let me check.
I posted in
75. They spent 75 billion in 2024.
So for fiscal year 2025, they projected 97.
Holy
crap. That could go up.
Dude, if Amazon says we're spending 120, NVIDIA's about to go to the freaking moon if they say that.
Yeah. Yep. 100. I was actually very surprised about Google's projection or guide up. That was not a little. That was a lot.
He got to compete with Zucks. He's got to compete with Zucks.
Yeah, that's true.
Up 3% now, Morgan.
Okay, Steve Kovac, thank you. Affirm earnings are out as well, and Mackenzie Sagalos has the numbers for us. Hi, Mackenzie.
Hey, Morgan. Affirm shares are up around 5% in extended trading. That follows a beat on the top line with revenue coming in at $866 million versus the analyst consensus of $807 million. The company posted an adjusted profit of 23 cents per share, but it's unclear if that's comparable to the 15-cent loss expected by Wall Street. Merchandise volume, a key metric that helps gauge the total value of transactions, increased 35% from a year earlier. It's the first time the company's GMV has surpassed $10 billion in a quarter. The Affirm card, which is its big bet for driving greater usage overall, has seen volume more than double. Now, the company is guiding third quarter revenue in the range of 755 to 785 million versus an estimate of 772 million. Back to you.
Affirm doing well is great because that means their underwriting is very sophisticated, and as rates come down, they can give out even more loans. So I'm happy, and they're profitable, which means that the company.
I think Amazon, they're just gonna wait. Amazon's just gonna wait. They're gonna wait for the call at this point. Cloudflare faded a little bit, but it is what it is. $50 billion market cap. It can do things.
Yeah, Cloudflare up 5%. It was down 10%. Elf cannot catch a break, dude.
Yeah, it just keeps going down. Damn.
Affirm up 10%. Again, getting profitable was a really good way to become efficient and the street is recognizing that. Up 10%. By the way, Affirm did all of this when rates were rising. I mean, they just shout out to them. Max Levchin, absolutely phenomenal founder. Elf right here down 22%. Amazon pseudo recovering, and then Pinterest. Still don't know why Pinterest is up, but it's up.
Honestly, you should do. I wonder what do you think Amazon's going to do during the earnings call? You think they're going to pump, go green, or you think they're going to dump back to the after our lows?
I don't know, dude. I don't know what's happening with Amazon. I mean, it depends on CapEx, right? It depends on.
It's a thing. I don't even know what is perceived as good for CapEx or bad.
MPWR earnings. Let me check that.
Monolithic Power. They're a competitor to On Semiconductor.
They are up 15%. Let me get those numbers. Let me see if I can. MPRW, Monolithic. I don't have the numbers anywhere. I'm going to have to wait to see if I can get those numbers, but Street likes it.
They pulled back quite a good amount from their all-time highs.
Yeah, we also had Expedia, if anyone uses that, 239 versus 210 EPS, 3.184 versus 3.07 billion. They were rumored to be getting bought out by Uber. Their stock is up 8%.
8%. Yeah, that's pretty good, dude. Wow.
Expedia. Shout out to Expedia. Amit check Doximity. Do you know that one, Sam? Doximity?
What? Doximity?
That's up 21%. What is this? What is Dox? Doximity? I did not know this is a $10 billion company. It's a big one.
That is a big company. That's not a small company for sure.
Online networking service for medical professionals. All right. I guess they had a good earnings. Let's get some coverage on Amazon. Let me see if I can get those numbers, guys, and then we'll keep going from there. We got the call in about 30 minutes.
Both here, just in terms of some of these metrics that matter for Amazon. I mean, we had operating margin of 11.3%. That was better than expected. It looks like North America revenue and operating income both better than expected. AWS basically in line. Online stores also better than expected at $75.6 billion. Physical stores better than expected. Little light on advertising services here. And then, of course, we know the guide is softer than the street was anticipating. So, Gil, I'll kick it off with you because overall this report seems pretty solid. Is it really the guide that's pressuring the stock right now?
Yeah, that's really all it is. And we'll get more granularity on the call. Clearly, Forex was a bigger impact than we thought. Leap year, we should have had in the numbers, but it also a factor. But if you were to focus on the two key numbers here, AWS growing 19%, which is the same as last quarter, means Amazon has regained the leadership in AI. Both Microsoft Azure and Google Cloud decelerated in the quarter. In fact, significantly decelerated in Google's case, while Amazon has been able to maintain the same growth while expanding margins. And then on the retail side, 8% margins in North America is unprecedented. It's by far the highest they've ever had, and it means they've taken that retail business to another level in terms of profitability. So those things are great. We'll have to see what they say about the guide.
Scott, how much is CapEx going to matter here too, especially as this company does continue to maintain these margins, at least for now, but we know everybody among the hyperscalers are spending quite a bit of money to build out their infrastructure, despite all the concerns around the DeepSeek shakeout a couple weeks ago.
Right. It seems like that was years ago now. But
Sam, what are you thinking? Makes sense on Amazon?
I don't know. It looks like a mixed bag, but it seems like the general direction is down unless they blow it out of the water. But, you know, what I've noticed lately is that a lot of mid caps are rallying and a lot of mega caps are dropping. So maybe it's a broadening of the market. Oh, look at that. Marvell Technology is up 2% after hours.
They didn't have earnings though, right?
No, they didn't have earnings, but they're a large supplier for Amazon, AWS data centers. So that was my bullish thesis with that one. They're doing pretty good.
Fortinet's up 12%, Cloudflare up 5%, Elf down 20%, Affirm up 12%.
Yeah, someone asked, why is CrowdStrike up after hours? Well, a lot of the cybersecurity companies, they usually give sympathy to each other on after our moves, especially earnings moves. So they usually move in tandem. Yeah, Palo Alto's up 1%, CrowdStrike's up 1%, Zscaler's up 1%. Yep. That's usually what happens.
Yeah, I would agree. Yeah, I guess. Okay, so let me ask you a question. The rotation thesis that everyone's been talking about, do you think it's real? Large caps, small caps?
No, it is real. It is real. Mega caps don't need to come back too much in order to have mid caps with RSP rally quite a bit. Like we're talking about this move after hours at Amazon. Like let's say it goes down like 10%. That's like $200 billion. Cloudflare is only worth 50. So if it just gets $5 billion of that 200 billion, not saying that's going to happen, but after hours could be what's happening. That's a 10% move in Cloudflare. Sentinel-1. Sentinel-1 is up almost %. Yep.
Do you think it would be healthy to see all the large caps come down 10%?
Yeah, I think it would.
I think as much as it would be healthy, I still think it's going to be hard for people to rotate as easily from their large caps, unless there's a macro headwind. But
yeah, I mean, it's very difficult. Like you need a lot of the large volume moves in order for big money to kind of hide in the wave, right? Like it's big, they can't just decide to just do it out of nowhere. Like they need a catalyst so that way they can sell or buy into liquidity.
Right.
So earnings is probably the best time to do that. Or you get the market down 5% like you did the other week, right? You saw, I remember that day the Qs were down almost over 2%, but Snowflake was up on the day. MongoDB was up on the day. Software stocks were up on the day, but mega caps were down big. That's when they make their big moves on those days.
Yeah, agreed. And by the way, guys, no Amazon CapEx has been confirmed, so you can't really read into it yet. We will hear in probably 30 minutes what they have to say. Amazon down 2.23%. NVIDIA's 129. Oh, looks like someone got the leak on the CapEx number. I mean, maybe.
129. That's not a move. Come on.
To be honest, that isn't a move. I forgot it closed at 128.7. Yeah.
That's not a move. You have Marvell Technology up 2.5%. See, I think the market likes what it sees. Actually, what was their CapEx last quarter versus the previous quarter? They usually have their quarterly CapEx. Proceed.
Dominic says, I'm so glad I didn't pick up ELF today. Yeah, dude. People were bottom fishing on that one, but you're going to have to keep fishing harder for this. Christina says it's a net zero for Amazon right now. Remember, it was at all-time high 2 days ago. That is also correct. Hopefully, covered calls print tomorrow on Amazon, and that does well. But yeah, in general, dude, I mean, it's kind of the same thesis I had on Google. It was hard to predict a pump when it was at all-time high. Same thing with Amazon. It's just a 10% pump, 8% pump, even 5% pump after it's already getting the premium.
Yeah. They priced it in ahead of time.
Yeah, they definitely priced it in ahead of time. Robinhood's up 0.5% after. I did buy 100 shares at 53.22 today on Hood. 53.58. It's up 0.77%. Palantir still 112 after hours. Palantir is now worth $253 billion. And
it is wild, man.
It is one of the top 30 companies in the United States of America.
Hims took a little bit of a breather today.
Hims also up 74%. You would imagine they take a breather. Yeah, there you go. There's Palantir right here, up number 40. It is just above Toyota and just below Chevron. So,
yeah, but look at these other companies. They're like staples. They're staples. Like they can't go anywhere. Like Palantir went from, I don't know. So what were they worth? Like 25 billion in 2022 to now we're 250. So they went from probably like last place to now 40th place. Like that's an insane move. And just today they went up 9 places.
I was looking at it last night. They were at their lowest. They were like 12.5 billion, something like that. So is Amazon green? Are we green? No, it's still down. It's trying to get there. It's trying to get there, but it's not there yet.
People definitely bought that dip. That's for sure.
Yeah, people definitely bought that dip. Out of all of these names, all right, so here's the question for the chat. Out of all of these names, if you had to buy one of them on this earnings reaction, which one do you buy? Like, do you go bottom fishing for ELF down 20%? Or do you buy Pinterest up 16%? Like, how would you play picking one?
ETF saying Palantir. It's not on the list. It's not on the list.
It's always on the list. It's always on the list. I see a lot of ELFs and a lot of Amazons here. I see a lot of ELFs. I'm curious, why is Pinterest up? I want to know about that. I still don't have a reason. So I'm curious about that one. But I mean, look, I would probably, I'm not going to do it, but I'd say ELF. Down 20% always tends to be a little bit of an overreaction in the stock market. We saw that with Roblox today. It was down 30%. It recovered, only down 8%, 11% on the day.
It was down 30%?
Yes, dude. I woke up and I was about to buy it and I was like, let me not do it. I don't understand this company. It ended out down 11%. I could have made 20% in a day if I bought it.
No way.
So I think these tend to be stupid moves, but we got to hear why the street is so upset.
Crap. It was in the 50s.
I saw it happen. I was awake.
I would have bought that. I would have bought that if I was.
I didn't do it. I didn't pull the trigger. I did not pull the trigger. NVIDIA 129.2, 130 would be hilarious, dude. You know, there were people on Twitter that were like really questioning CapEx, like really questioning CapEx hardcore. And I feel like that was a heat of the moment, a prisoner of the moment type of reaction last week. Because if you really looked into DeepSeek, at the end of the day, they still used 50 to 100,000 H100s. Their inference training was cheaper, but they still needed the damn GPUs in the first place. So
I'm still a proponent that the CapEx is not going to go toward the chips like we thought they were going to go toward. I think it's going to go toward network infrastructure and also software. And I think that's why we're seeing a rotation of the money into software versus data center stocks for that very reason.
Agreed, but we still, if we're going to get to AGI, like we need CapEx.
But if you think about it, if it's true, if those benchmarks are true, and what's up, Paper Gains, Jason? If that's true, then that means that you can be more efficient with 95% of your queries not running and it'll do 5%. So technically speaking, you're going to get a 20x on your compute if you just change the code.
Potentially. I mean, NVIDIA is having their event in March, and they're going to talk a lot more about Hopper. I mean, if Zuck says he has to upgrade because Sundar is upgrading, and yes, they're getting more out of their compute, but they still need to get the freshest chips. And I don't think anyone knows, right? Maybe they can juice out of Blackwell everything they need for the next 2 years, but
yeah. Oh, they did the benchmarking. Google did the benchmark against the H200s. So their TPUs are performing, I think, 30% better than the H200s, which is a pretty big margin for Google. Amazon didn't do their benchmarking against it. We're probably going to hear about it in the call. But if Amazon's Trainium and Infinium chips, their proprietary chips, are going to do really well, which it looks like Marvell Technology is pricing that in, as well as AVGO or Broadcom was pricing that in, this could mean something for that sector, for proprietary chips.
yes,
Higher margins.
That is very fair. NVIDIA right here, 129.25. All right, so we don't have CapEx for 2025 yet. However, in 2024, it was 83 billion, up from 52 billion in 2023. For Q4, it was 27.83 billion, up from 14 billion.
I think that was expected.
I think that was expected as well. Yes.
Yeah.
Elf right here.
Oh, wait a minute. No, that was not expected. That was higher than expected. So next year they're supposed to be, or fiscal year 2025, they're supposed to be 97 billion. Let me look at my chart here because I had their CapEx for.
Someone's saying 105 billion. Do you guys actually, is that the right number, guys?
That's a run rate.
Oh no, no, that's not 2025.
I don't know. They could be right. They could be right.
But it's got to be good because NVIDIA's getting a bid. It's got to be something good. Whoever, or maybe people are speculating that it's good. AJ, we already looked at Elf, lowered guidance very badly for full year 2025. They said social media is not talking about their makeup anymore. That's a legit reason the CEO just gave to CNBC. And so that's why it's down 21%. Yeah, Alta's also down 2% on this now. 129.3 on NVIDIA. I wish Snapchat did what Pinterest did.
Yeah. Amazon's CapEx came in 28% higher, which is what that guy was saying. That's what Gene Munster said, at least. I would believe Gene Munster. I mean, I don't think he's pulling these numbers out of his A, but that's why we're seeing a lot of bidding up for a lot of the picks and shovels.
AI trade is not done. AI trade is not done yet. Maybe we got 2 more years left, but Amazon CapEx spend for the quarter came in at 28% higher than expectations, 91% year over year. Before the AI trade can take a CapEx victory lap, we need to hear the CapEx guidance on the call.
Yep, we'll see.
Yeah, I mean, if they can guide for 100 billion, bro, we're going up on NVIDIA. Hopefully.
Imagine if they guide up in the CapEx and NVIDIA's flat and Palantir's up.
Dude.
I just turn off the camera and just liquidate my account. Be like, this is ridiculous.
NVIDIA, Palantir is 30 cents away from 113, folks. So, dude, what a move. What a freaking move. I mean, again, Sam said in the beginning of the show, he thinks there's a government-related reason for this.
There has to be some contract there in the works for. People are talking in the background. It's getting bid up.
Oh my. All right, let's get earnings from another company, and then we'll keep going from there. We got the call in about 20 minutes for Amazon.
Software.
Hey, how about this? Do you think Amazon or Jassy is going to mention Palantir in the call?
I wouldn't be surprised if it did, right?
That'd be pretty wild, dude.
Microsoft mentioned them a couple quarters ago. I wouldn't be surprised. I wouldn't be.
That handily beat street expectations, revenue above consensus, thanks to winning bigger clients. In fact, customers are spending more than $1 million. That specific bucket grew 47% compared to the same time a year ago. And I would point out that cybersecurity firms in general have performed well, their stocks, since President Trump took office. Matthew Prince, co-founder and CEO, says they're really touting the success of Cloudflare's business in artificial intelligence and how that remains a top focus for the company in delivering return on investment, with Cloudflare shares here up about 4.5% and more.
All right, that's what we got on Cloudflare. We had Expedia, Cloudflare, Amazon, Fortinet, Affirm. Pretty much all of these names have officially reported. And most are green except Elf and Amazon. Everything else is pretty much green.
Yep.
Monolithic Power up 17, Expedia up 9, Docs up 23, Cloudflare up 6. Sam, besides Amazon, what's your favorite Mac 7?
The Googs.
What did you think of their call yesterday, or their earnings?
Honestly, I thought their earnings were good. But it was near all time. Everything I say is like confirmation bias, right? So of course my opinion is going to change based on the price action in terms of interpreting how it was. At the end of the day, though, if I look at the fundamentals, like the metrics, like Google did good last quarter. They were just printing money over and over and over again to increase CapEx. So obviously there's some sort of incentive to be increasing the amount of money they're spending because they think it's going to have a higher ROI at the end of the day. Compute constraint, which is great because that means the demand is still there. I thought it was good. Pump Google.
Okay,
by Google.
Let me ask you. Shout out to Chris. let me ask you another question. Let's say, Sam, you owned Palantir at a $10 average and you held on till today. What are you doing today with that Palantir stock?
I wouldn't be on this show. I'd probably be drinking right now.
Well, okay. Assuming you called into this show to say hi.
Actually, I would be on this show and I would be drinking, but I'm not.
but like in all seriousness, for people that have phenomenal averages on Palantir that are nervous, because I know a lot of people are, how would you psychologically deal with that situation?
If I was holding on to this point, then there would probably be nothing that would make me sell. Like I just wouldn't sell. Like if you're holding a 10 bagger, you're probably not going to sell here. You're probably just never going to sell. Right. And that serves it right. Like there's people who have like a $4 average NVIDIA. You think they're going to sell it over here? No, they're going to hold on to it. They're going to hold on to it forever. They'll ride.
Okay, so what if someone comes with the pushback and says NVIDIA showed the growth to get there, Palantir hasn't showed the growth yet, I'm scared about the valuation? What would your response be?
Yeah, when it comes to that, if that was the case, I would have sold a long time ago, which I did. But if I hadn't sold a long time ago and I still had all of my shares today, I would probably not sell a single penny.
Your thoughts are very similar to mine.
I mean, why would you sell? Well, why would you sell? If you've held a 10 bagger, why would you sell now? You would have sold 10% ago at a 9 bagger.
Yeah, and if it falls, then you're if it falls 50%, you're still so green that you kind of just like whatever. If it goes up, you sit back and enjoy the ride.
Yeah.
So now if you have a $90 average or an $85, I would seriously think of like, okay, what's going on? But if you have a $10 average, it's different.
Yeah, I mean, like if you bought at $90, then you'd have to have a very good reason why. And if it was anything other than a trade, you'd probably hold. But if it was a trade, I don't know, YOLO, maybe you hold on to it or you don't. Like that's really short-term thinking when it comes to a trade. But like if you bought it like, let's say $30 and it's here and you haven't sold, I would probably say don't sell. Why would you sell unless it's a trade? It's really two different mindsets, right? Like, is this a long-term position? If it's a long-term position, then just hold. Dude, this thing cannot catch a bid. Like, it's just getting dumped.
Elf is not having a good Christmas this year. I mean, this is bad, dude.
Does the CEO wear makeup?
No, the CEO is this white guy, but he's nice. He's
what? That was a brown dude.
Oh, it is a brown dude. You're right. Well, who is the... Oh, no, you're right. I'm thinking of a different company. Well... Yeah, I don't think this guy wears makeup.
It looks like he wears makeup.
It looks like he wears makeup.
Why wouldn't he? He's advertising his own makeup. He's got advertised.
It kind of looks like he's wearing makeup.
Yeah, dude, he's wearing makeup.
He's got some foundation on, like
he's got to advertise his product, make sure it works.
What if Palantir is 50% of your portfolio now?
Again, if you've been holding since $10 and you are a long-term shareholder, selling now would mean that you're a short-term shareholder. I'm not saying you shouldn't. I'm just saying for me, if I haven't sold a single share up to this point and I had an average under $10, why would I sell now? I would have sold a while ago.
Yeah. Yeah. Sam, we missed this one. Billing down 30%.
Oh, they're back down there. Yeah. You know, I never really looked into this company and what they actually do. I know they're a software company, but this thing was down here like a few quarters ago, made a comeback. Now it's down again. Like, it's a liquidity exit, dude.
Okay, I have some coverage here on billing. Let's see.
We're seeing such a dramatic reaction. This is the cloud-based software
from positions.
Expectations. Revenue for the quarter also ahead of what Wall Street had anticipated, but its Q3 revenue guidance a bit light, and expectations were high going into this report. So perhaps that's why we're seeing such a dramatic reaction in shares right now in overtime, down about 28%. Executives adding that they are moving fast to address the vast market opportunity to transform financial operations for millions of small businesses. But investors here left wanting more. Morgan?
All right.
We do have a Palantir PR after hours. Palantir wins Dresner Advisory Services 2024 Application Innovation and Technology Innovation Awards in multiple categories. They won this back in 2023, so it's nothing too crazy. Dresner is if I'm not wrong, consulting analytics firm that ranks software providers. And so makes sense that Palantir is winning these awards, but I don't know if this is pumping it after hours or if it pumped it during the day. We do have that press release right now. This is the first real press release of the year for Palantir outside of earnings. So we got that just now. Amazon still down 2. We got the call in 15 minutes. Pinterest down 16. All right, let's talk about Grab because we said we would talk about it. So this is the perfect time. What are you thinking about Grab and how are you currently positioned for it?
Still holding. I'm not, I haven't added. I should have added before that 10% pump, but I mean, you know, I was actually a little bit skeptical about that merger to begin with when I looked into it. It was awesome news. It was up 10%, great. But I mean, GoTo has completely denied previous talks about it. They denied it again, right? It's on rumors, just floating, you know. So I was actually surprised they just gave back all the gains, but it was up 2% today. So we'll see. I mean, you know, it's a long-term thesis with this one, just holding.
What is your excitement with? I mean, for people that don't know, Sam is the person who got me to really look into Grab. So, what is your bull case? Why do you like this company so much?
Well, there's more than a few things. They're doing $500 million buybacks. They're already profitable, EBITDA profitable on 2 of the 3 segments. They're likely going to be profitable on their financial arm, which is great.
Yep.
They're the market leader in Southeast Asia. It has the emerging markets tailwind when the dollar does eventually pull back a little bit, which would be great from an FX perspective. It's cheap, in my opinion. Compared to its one third of its market cap is in cash. So that's definitely good news. Yeah, I mean, it's just the high margin businesses are growing pretty quickly. Food delivery is growing. Ride shares are growing as much. They're planning to reduce their advertising. So they're going to be reducing their costs, which means the profitability is going to come up. CEO comes from an upbringing where his dad is like some part of some large Asian auto manufacturing company, runs it. So he knows how these businesses work inside and out. He went to Stanford. Uber is a 25% in company. Dara, CEO of Uber, is on the board. I mean, I don't know. It's like it's set up pretty good. It's also a pretty good hedge for U.S. equities as well. So
strong bull case. People are concerned about 4 billion shares. Is that annoying to you or no?
No. Not at all. I mean, you know, it's in the early stages. Well, I wouldn't say early stages, but it is in the fairly early stages. There's a lot of growth potential. Yeah, I mean, you know, it's widely used. It is widely. If I ask almost any of my relatives in the Philippines, like they all use Grab. If they were to use a delivery service or a ride-hailing service, they'd use Grab. There's Grab cars everywhere. It's like basically the equivalent of saying Ubers or the yellow cab taxis like 20 years ago in New York. You see Grab taxis everywhere. The green.
Yeah, I agree. Also, the
Look at those
chart.
technicals, dude. Yeah, that chart looks amazing.
Yeah, let me show you guys this. Someone sent me this picture yesterday on Twitter, and I actually didn't look at them together, but this is the Robinhood all-time chart. Everyone can see it. So pumps up during 2021 SPAC, dumps, spends about 2 years consolidating, then pumps back up. And then this is the Grab chart. Pumps up 2021, dumps. It has spent 2.5 years consolidating. And now you needed a catalyst for Robinhood. It was crypto, profitability, innovation, products, Vlad, becoming a really strong founder, executing. And here, to me, it's adjusted EBITDA profitability, free cash flow, maybe a merger, but overall numbers going up and to the right. You and me are not thinking this is going to go to 50 like Robinhood did. We're expecting, $8 to $10. I'm thinking $10 by 2027. So
yeah, you need more than a few ingredients to be able to rally that hard. And I think one of the main ingredients is being a US based company to be able to rally that hard. Grab is listed on the NASDAQ, but they are not a US based company. They're based in Singapore.
Right.
So I think that would withhold it from pumping as hard as these other stocks. But at the end of the day, these other stocks are not necessarily pumping, right? Like they have legitimate revenues, they're actually profitable and stuff, with the exception of okay, Palantir, obviously it's overvalued, but there's speculation that they might have ties with the US government in some sort of back-end AI infrastructure. So there's certain things that happen with US companies that don't necessarily happen with foreign equities. But I think the fact that it's listed on a US stock exchange does make a bit of a difference.
And there's no ADRs and they have clean books. They're not, in the CCP.
Yeah.
So I agree. I'm expecting 10. I don't think it's crazy. So, and a 10, a little bit over a double in 2 years is, I think, a phenomenal return, So now the catalysts just need to be in place to get there. There's your Amazon cheat sheet right there for everyone looking at earnings. It's down about 3%. And now CapEx is the big thing we're waiting for.
That's a lot of red.
Yeah, you see right here, unusually large FX impact. You think Trump's going to get ready to bring down this dollar? Or what do you think he's doing here?
Well, I mean, it's not really Trump, right? It's Scott Bessent. But his plans are to not continue selling the short-term end of the curve or issue the short-term end of the curve. His plan is to, I think his plan is to sell the middle or the belly of the curve. Basically, right. He said that whatever Yellen did was completely wrong. He's down for getting GDP up to 3%. He's down for selling, I think it was it was a 3 handle of billions or millions of barrels of oil. He wants to get the deficit down to 3% from 6.5%. So, we'll see. We'll see. I mean, definitely it is very bullish for the dollar in light of all this. But the dollar at 110 does tighten liquidity conditions, which is not good for stocks.
Yeah, it would be great for Grab. It would be great for the Mag 7 that have international revenues. So, I mean, hopefully we can get that dollar to slow down a bit. But right now it's not there. And yeah, Bessent did say the 10-year is what he's most focused on this morning. Amazon down 3%. NVIDIA giving up its 129.40 pump right here, down about 0.17. We got the call in 7 minutes on Amazon.
Yeah, Amazon's back down.
Yeah.
They're just waiting for the call, though. They're going to chop it up until the call.
How do you genuinely feel about the health of the markets? Do you think we're in a euphoric market? Do you think we're in a relatively strong market?
I mean, I think we're quite a bit extended, but we are in a bull market, so it can stay extended for quite some time. Dude, did you look at the AI sentiment survey?
No.
So they take this sentiment survey every single week. Just Google AI, and then you'll find sentiment survey on there. That's a survey do you know about that one?
I've never seen this before, but I'm looking at it right now.
So it's a survey that's taken every single week. It's a survey for registered population. So you actually have to go into their site and register for an account. So there's a lot of spam that can't be done. But this is done on a weekly basis. And this actually has a positive correlation in terms of finding peaks and troughs in the market. And it hit a bearish sentiment peak in the last year. This is stuff you'd see on August 5th. You wouldn't see it within a couple of percentages away from the all-time high.
So are you interpreting that as people are too scared?
People are scared. People are scared of some 10% market correction. You go on CNBC and everything, they all say like, oh, we're expecting a 10% correction this year. Even Tom Lee thinks Bitcoin's going to go down to 75,000, all this stuff. People are defensive this year. And I'm not saying it's time to buy calls. I'm just saying like this probably is not a time where I want to load up. And I wouldn't suggest this is a time to load up. I think this is a time to be cognizant and defensive and keep a lookout for the data. But again, if you're a long-term investor, this is all 100% noise.
So speaking of fear, we just got money market fund data. Put the poll in the chat, increase or decrease. Sam, what do you think? You think we increased or decreased this week?
I think we probably rates went down. I think we increased because people want to get their money and lock in the high rate before it comes down more.
Okay, 60% of you said increase versus decrease. The answer is money market funds increased by 44 billion over the past week. 6.9.
I'm like swearing over here. I can't believe I was wrong. It's ridiculous.
No, you were right. You were right.
No, I said it decreased. Decreased. Oh, wait, no. You were right. You're right. I think I said decrease, but what I really meant was increase because I was referring to people locking
in the rates. Right. Yeah.
That's right.
So
That's right.
But
I put an extra 44 billion in there. So, you're welcome, guys.
This goes to your point. People are a little scared, right?
Yeah.
People are a little scared. There you go.
I have to admit though, I'm not going to base like my positioning in my portfolio 100% on sentiment reading, like maybe some short-term positions, but it's like, dude, like I'm not going to sell Amazon if this thing drops down to 150, and I hope it does one day, like August 5th, I'm going to buy. I'm going to buy the dip.
Dude, Amazon's not going to 150. That's like,
it was just there a few months ago. Palantir was in the 20s a few months ago.
No, but Amazon was at 150. Oh, you're referring to August 5th prices, right? So
yeah,
what would that be? So 238 minus 150, that would be a
30% drop,
37% decline we would need. I don't know if the market can hold up if Amazon falls 37%. I mean,
yeah, I know. It was at 198 before it fell to 155 on August 5th. So, 500 Billy is not that's no joke. That's preschool money for you. So, but for us little people, like that's.
Hold on, you're saying for me?
A lot of money. Yeah, for you, dude.
What do you mean me? What are you talking about, bro? That is, we got to be talking about you with 20% in Amazon.
Yeah, right. I wish that was me.
The call is starting in 3 minutes, guys. So it's going to be a little bit of a boring call. I mean, Jassy's amazing. I love Jassy, but it's going to be about 25 minutes of just pure boredom in financial statements. So you guys got to be ready.
I might not be able to stay for the entire call, by the way.
That's okay. That's cool. Do you know anything about InnoData?
No.
I don't know anything about that either. Yeah, guys. I mean, after this, we kind of don't have that many earnings left. We do have earnings left, but like in terms of big tech, it's just Nvidia.
Yeah, big tech is pretty much done besides Nvidia. Mid cap reports. So I got a good amount of mid cap stocks. That's when a lot of software stocks report. So that's gonna be pretty interesting.
David, thank you for the $7 super chat. Hey, Amit and his guest, Palantir has about 5.2 billion in cash. So they spend 20% of their cash and buy Bitcoin. I would say no. My answer would be no. I would.
How are you going to put all that money in treasuries and then put it in Bitcoin right after? Like that's just, I would never see that happening. That's crazy.
Yeah, I don't think it would be Bitcoin. Let's see, by the way, if there's any insider sells today on Palantir. Palantir, do we have any insider selling? Nope, no insider selling today. Let's check Robinhood, any insider selling? I don't think they can because we're close to earnings. Yeah, no insider selling either on Hood.
Do you remember that day when Palantir became more expensive than Snowflake in terms of its market cap?
I remember that day very clearly. Yeah.
I know. I still feel that. I still feel that slap in the face, man.
I forgot you loved Snowflake. Well, yeah.
I still have it.
I mean, look, I think Snowflake could definitely catch a bid, but Palantir's trading beyond. I mean, like this is just. It's beyond SaaS, dude. It's like it's Palantir. It's this like philosophical aura that's attached to it. It's something different, something unexplainable. It's like
It's a very customizable product. Like, if you wanted something vanilla and off the shelf, then you're going to get Snowflake. But if you want like something that's like really going to make a difference in the back end data of your company, like, and you had the money for it, you're probably going to get Palantir.
No, but you're talking about the product, which I agree with you. I'm just saying the stock, the way it's trading, like,
it's another animal, man. It's another animal.
It deserves a premium against Snowflake for the reasons you talked about. But this premium that it's getting against freaking Chevron, which is, one of the biggest companies, it's like, it is something different. And I can't explain it, but it's special.
It's very interesting. It's very interesting what's going to happen. And a Michael Jackson meme where he's eating the popcorn in the movie theater, like that's so what today is.
Yeah, it's pretty incredible, but it's happening. It is indeed happening. I think the best thing for longs is that we know that it's extended. If it gets a pullback, you kind of just sit and wait, right? And now, does it get the 70% pullback some of the FinTwit bears are saying? I don't think so. And if it doesn't, and we come back to 70, 80, 65, I mean, that's still not the craziest thing in the world, All right, AMZN Call. Let's see if we've got it here.
President of Investor Relations, Dave Files. Thank you, sir. Please go ahead.
Hello, and welcome to our Q4 2024 financial results conference call. Joining us today to answer your questions is Andy Jassy, our CEO, and Brian Olsavsky, our CFO. As you listen to today's conference call, we encourage you to have our press release in front of you, which includes our financial results, as well as metrics and commentary on the quarter. Please note, unless otherwise stated, all comparisons in this call will be against our results for the comparable period of 2023. Our comments and responses to your questions reflect management's views as of today, February 6th, 2025 only, and will include forward-looking statements. Actual results may differ materially. Additional information about factors that could potentially impact our financial results is included in today's press release and our filings with the SEC, including our most recent annual report on Form 10-K and subsequent filings. During this call, we may discuss certain non-GAAP financial measures. In our press release, slides accompanying this webcast, and our filings with the SEC, each of which is posted on our IR website, you will find additional disclosures regarding these non-GAAP measures, including reconciliations of these measures with comparable GAAP measures. Our guidance incorporates the order trends that we've seen to date and what we believe today to be appropriate assumptions. Our results are inherently unpredictable and may be materially affected by many factors, including fluctuations in foreign exchange rates, changes in global economic and geopolitical conditions and customer demand and spending, including the impact of recessionary fears, inflation, interest rates, regional labor market constraints, world events, the rate of growth of the internet, online commerce, cloud services, and new and emerging technologies, and the various factors detailed in our filings with the SEC. Our guidance assumes, among other things, that we don't conclude any additional business acquisitions, restructurings, or legal settlements. It's not possible to accurately predict demand for our goods and services, and therefore our actual results could differ materially from our guidance. And now, I'll turn the call over to Andy.
Thanks, Dave. Today, we're reporting $187.8 billion in revenue, up 10% year over year. Given the way the dollar strengthened throughout the quarter, we saw $700 million more of foreign exchange headwind than we anticipated at guidance. Without that headwind, revenue would have been 11% year over year and exceeded the top end of our guidance. Operating income was $21.2 billion, up 61% year over year, and trailing 12-month free cash flow adjusted for equipment finance leases was $36.2 billion, up $700 million year over year. We're pleased with the invention, customer experience improvements, and results delivered in 2024, and have a lot more planned in 2025. I'll start by talking about our stores business. We saw 10% year-over-year revenue growth in our North America segment and 9% year-over-year in our international segment, excluding the impact from foreign exchange rates. Our continued focus on expanding selection, lowering prices, and improving convenience drove strong unit growth that even outpaced our revenue growth. We continue to add to our broad range of selection, giving customers choice across a variety of price points. We welcome notable brands to our store throughout 2024, including Clinique, Estée Lauder, Oura Rings, and Armani Beauty. We continue to add to the hundreds of millions of products offered from our selling partners, who made up 61% of items that we sold in 2024, our highest annual mix of third-party seller units ever. We also launched AMZN Call for U.S. customers in Q4, which offers customers an engaging shopping experience that brings ultra-low-price products into one convenient destination. It's off to a very strong start. Customers continue to want Amazon to be the place they rely on for sharp pricing. In the fourth quarter, consumers saved more than $15 billion with our low everyday prices and record-setting events during Prime Big Deal Days in October and Black Friday and Cyber Monday around Thanksgiving. Additionally, Profitero's annual pricing study found that entering the holiday season, Amazon had the lowest online prices for the 8th year in a row, averaging 14% lower prices on average than other leading retailers in the U.S. Our speed of delivery continues to accelerate, and 2024 was another record-setting year for Prime members. We expanded the number of same-day delivery sites by more than 60% in 2024, which now serve more than 140 metro areas, and overall, we delivered over 9 billion units the same or next day around the world. Our relentless pursuit of better selection, price, and delivery speed is driving accelerated growth in Prime membership. For just $14.99 a month, Prime members get unlimited free shipping on 300 million items, often same-day or one-day delivery, exclusive shopping events like Prime Day, access to a vast collection of premium programming and live sports on Prime Video, ad-free listening of 100 million songs and podcasts with Amazon Music, access to unlimited generic prescriptions for only $5 a month, unlimited grocery delivery on orders over $35 from Whole Foods Market and Amazon Fresh for $9.99 a month, a free Grubhub Plus membership with free unlimited delivery, and our latest benefit of a 10-cent per gallon fuel discount at BP, Amoco, and AMPM stations. When you think about this as a whole, and also compared to many other membership services that are comparably or more expensively priced that offer just one benefit like video, Prime is a screaming deal, and we have more coming for our Prime members in 2025. We also remain squarely focused on cost to serve in our fulfillment network, which has been a meaningful driver of our increased operating income. We've talked about the regionalization of our U.S. network. We've also recently rolled out our redesigned U.S. inbound network. While still in its early stages, our inbound efforts have improved our placement of inventory so that even more items are closer to end customers. Ahead of Black Friday in November, we'd improved the percentage of ordered units available in the ideal building by over 40% year over year. We've also spent considerable time optimizing the number of items we send customers in the same package, which reduces packaging, is more convenient for customers, and less expensive for us to fulfill. And our per-unit transportation costs continue to decline as we build out and optimize our last-mile network. Overall, we've reduced our global cost to serve on a per-unit basis for the second year in a row, while at the same time increasing speed, improving safety, and adding selection. As we look to 2025 and beyond, we see opportunity to reduce costs again as we further refine inventory placement, grow our same-day delivery network, and accelerate robotics and automation throughout the network. In advertising, we remain pleased with the strong growth on a very large base, generating $17.3 billion of revenue in the quarter and growing 18% year over year. That's a $69 billion annual revenue run rate, more than double what it was just 4 years ago at $29 billion. Sponsored products, the largest portion of ad revenue, are doing well, and we see runway for even more growth. We also have a number of newer streaming offerings that are starting to become significant new revenue sources. On the streaming video side, we wrapped up our first year of Prime Video ads, and we're quite pleased with the early progress and head into this year with momentum. We've made it easier to do full funnel advertising with us. Full funnel is from the top of the funnel with broad reach advertising that drives brand awareness to mid funnel, where sponsored brands let companies specify certain keywords and audiences to attract people to their detail pages or brand store on Amazon, to bottom of the funnel, where sponsored products help advertisers surface relevant product ads to customers at the point of purchase. We make this easy for brands to sign up for and deploy across our growing advertising. We also have differentiated audience features that leverage billions of customer signals across our stores and media destinations. From Amazon Marketing Cloud's secure clean rooms, providing advertisers the ability to analyze data, produce core marketing metrics, and understand how their marketing performs across various channels, to our new multi-touch attribution model that helps advertisers understand how their marketing is working. If an advertiser uses streaming TV, display, sponsored products, and other ad types in their campaign, multi-touch attribution will show the relative contribution of each to their sales. Moving on to AWS, In Q4, AWS grew 19% year over year and now has a $115 billion annualized revenue run rate. AWS is a reasonably large business by most folks' standards, and though we expect growth will be lumpy over the next few years as enterprise adoption cycles, capacity considerations, and technology advancements impact timing, it's hard to overstate how optimistic we are about what lies ahead for AWS's customers and business. I spent a fair bit of time thinking several years out, and while it may be hard for some to fathom a world where virtually every app has generative AI infused in it, with inference being a core building block just like compute, storage, and database, and most companies having their own agents that accomplish various tasks and interact with one another, this is the world we're thinking about all the time. And we continue to believe that this world will mostly be built on top of the cloud, with the largest portion of it on AWS. To best help customers realize this future, you need powerful capabilities at all three layers of the stack. At the bottom layer, for those building models, you need compelling chips. Chips are the key ingredient in the compute that drives training and inference. Most AI compute has been driven by NVIDIA chips, and we obviously have a deep partnership with NVIDIA and will for as long as we can see into the future. However, there aren't that many generative AI applications at large scale yet. And when you get there, as we have with apps like Alexa and Rufus, costs can get steep quickly. Customers want better price performance, and it's why we built our own custom AI silicon. Trainium 2 just launched at our AWS reInvent conference in December, and EC2 instances with these chips are typically 30 to 40% more price performant than other current GPU-powered instances available. That's very compelling at scale. Several technically capable companies like Adobe, Databricks, Poolside, and Qualcomm have seen impressive results in early testing of Trainium 2. It's also why you're seeing Anthropic build their future frontier models on Trainium 2. We're collaborating with Anthropic to build Project Rainier, a cluster of Trainium 2 Ultra servers containing hundreds of thousands of Trainium 2 chips. This cluster is going to be 5 times the number of exaflops as the cluster that Anthropic used to train their current leading set of Claude models. We're already hard at work on Trainium 3, which we expect to preview late in 25, and defining Trainium 4 thereafter. Building outstanding performing chips that deliver leading price performance has become a core strength of AWS's, starting with our Nitro and Graviton chips in our core business, and now extending to Trainium and AI, and something unique to AWS relative to other competing cloud providers. The other key component for model builders is services that make it easier to construct their models. I won't spend a lot of time in these comments on Amazon SageMaker AI, which has become the go-to service for AI model builders to manage their AI data, build models, experiment, and deploy these models, except to say that SageMaker's HyperPod capability, which automatically splits training workloads across many AI accelerators, prevents interruptions by periodically saving checkpoints and automatically repairing faulty instances from their last saved checkpoint and saving training time by up to 40%, it continues to be a differentiator. Received several new compelling capabilities at reInvent, including the ability to manage costs at a cluster level and prioritize which workloads should receive capacity when budgets are reached, and is increasingly being adopted by model builders. At the middle layer, for those wanting to leverage frontier models to build Gen AI apps, Amazon Bedrock is our fully managed service that offers the broadest choice of high-performing foundation models with the most compelling set of features that make it easy to build a high-quality generative AI application. We continue to iterate quickly on Bedrock, announcing Luma AI, Poolside, and over 100 other popular emerging models to Bedrock and reInvent. In short order, we also just added DeepSeek's R1 models to Bedrock and SageMaker. And additionally, we delivered several compelling new Bedrock features at reInvent, including prompt caching, intelligent prompt routing, and model distillation, all of which help customers achieve lower cost and latency in their inference. Like SageMaker AI, Bedrock is growing quickly and resonating strongly with customers. Related, we also just launched Amazon's own family of frontier models in Bedrock called Nova. These models compare favorably in intelligence against the leading models in the world, but offer lower latency, lower price, about 75% lower than other models in Bedrock, and are integrated with key Bedrock features like fine-tuning, model distillation, knowledge bases or RAG, and agentic capabilities. Thousands of AWS customers are already taking advantage of the capabilities and price performance of Amazon Nova models, including Palantir, Deloitte, SAP, Dentsu, Fortinet, Trellix, and Robinhood, and we've just gotten started. At the top layer of the stack, Amazon Q is the most capable generative AI-powered assistant for software development and to leverage your own data. You may remember that on the last call, I shared the very practical use case where Q Transform helped save Amazon's teams $260 million and 4,500 developer years in migrating over 30,000 applications to new versions of the Java JDK. This is real value, and companies asked for more, which we oblige with our recent deliveries of Q transformations that enable moves from Windows.NET applications to Linux, VMware to EC2, and accelerates mainframe migrations. Early customer testing indicates that Q can turn was going to be a multi-year effort to do a mainframe migration into a multi-quarter effort, cutting by more than 50% the time to migrate mainframes. This is a big deal, and these transformations are good examples of practical AI. While AI continues to be a compelling new driver in the business, we haven't lost our focus on core modernization of companies' technology infrastructure from on-premises to the cloud. We signed new AWS agreements with companies including Intuit, PayPal, Norwegian Cruise Line Holdings, Northrop Grumman, the Guardian Life Insurance Company of America, Reddit, Japan Airlines, Baker Hughes, the Hertz Corporation, Redfin, Chime Financial, Asana, and many others. Consistent customer feedback from our recent AWS reInvent gathering was appreciation that we're still inventing rapidly in non-AI key infrastructure areas like storage, compute, database, and analytics. Our functionality leadership continues to expand, and there were several key launches customers were abuzz about, including Amazon Aurora DSQL, our new serverless distributed SQL database that enables applications with the highest availability, strong consistency, Postgres compatibility, and 4 times faster reads and writes compared to other popular distributed SQL databases. Amazon S3 Tables, which make S3 the first cloud object store with fully managed support for Apache Iceberg for faster analytics. Amazon S3 Metadata, which automatically generates queryable metadata, simplifying data discovery, business analytics, and real-time inference to help customers unlock the value of their data in S3. And the next generation of Amazon SageMaker, which brings together all the data, analytics services, and AI services into one interface to do analytics and AI more easily at scale. As 2024 comes to an end, I want to thank our teammates and partners for their meaningful impact throughout the year. It was a very successful year across almost any dimension you pick. We're far from done and look forward to delivering for customers in 2025. With that, I'll turn it over to Brian for a financial update.
Thanks, Andy. Starting with our top-line financial results. Worldwide revenue was $187.8 billion, an 11% increase year over year, excluding the impact of foreign exchange. This equates to an approximate $900 million headwind from FX in the quarter, which is about $700 million higher than what we'd anticipated in our Q4 guidance range. Excluding that additional FX headwind, we would have exceeded the top end of our revenue guidance range. Worldwide operating income was $21.2 billion, our largest operating income quarter ever, and was $1.2 billion above the high end of our guidance range. Across all segments, we continue to innovate for customers while operating more efficiently at the same time. In the North America segment, fourth quarter revenue was $115.6 billion, an increase of 10% year over year. International segment revenue was $43.4 billion, an increase of 9% year over year, excluding the impact of foreign exchange. Worldwide paid units grew 11% year over year, as our focus on low prices, broad selection, and fast shipping continues to resonate with customers. Shifting to profitability, North America segment operating income was $9.3 billion, an increase of $2.8 billion year over year. Operating margin was 8%, up 190 basis points year over year. In the international segment, operating income was $1.3 billion, an improvement of $1.7 billion year over year. Operating margin was 3%, up 400 basis points year over year. This marks the 8th consecutive quarter where we've seen year-over-year margin improvement in both the North America and international segments. 2024 also marks the second year in a row where we've lowered our global cost to serve on a per-unit basis. In the fourth quarter, we saw strong productivity in our transportation network from improved inventory placement, higher units per package, and reduced travel distances. We also saw improved productivity in our fulfillment centers. Overall, our teams executed extremely well throughout the quarter, and particularly during our peak seasons. I want to thank them for all they do to deliver for our customers. Looking ahead, we have several opportunities to keep lowering our costs through even better inventory placement, which also allows us to deliver items to customers faster. In the U.S., we're tuning our inbound network and continuing to expand our same-day delivery network. Globally, we're adding automation and robotics throughout our network. While these efforts will take time to implement and progress may not be linear, we have a good plan to continue to drive improvements in our cost structure. Advertising remains an important contributor to profitability in the North America and international segments. This quarter, we saw strong advertising revenue growth on an increasingly large base. We will also continue to invest in experiences that have potential to be important to customers in Amazon long-term, in areas like Alexa, healthcare, and grocery, as well as Kuiper, including the planned launches of our production satellites in the coming months. As a reminder, we currently expense the majority of the costs associated with the development of our satellite network. We will capitalize certain costs once the service achieves commercial viability, including sales to customers. Moving next to our AWS segment, revenue was $28.8 billion, an increase of 19% year over year. AWS now has an annualized revenue run rate of $115 billion. During the fourth quarter, we continued to see growth in both generative AI and non-generative AI offerings, as companies turn their attention to newer initiatives, bring more workloads to the cloud, restart or accelerate existing migrations from on-premise to the cloud, and tap into the power of generative AI. Customers recognize to get the full benefit of generative AI, they have to move to the cloud. AWS reported operating income of $10.6 billion, an increase of $3.5 billion year over year. This is a result of strong growth, innovation in our software and infrastructure to drive efficiencies, and continued focus on cost control across the business. As we've said in the past, we expect AWS operating margins to fluctuate over time, driven in part by the level of investments we're making. Additionally, we increased the estimated useful life of our servers starting in 2024, which contributed approximately 200 basis points to the AWS margin increase year over year in Q4. Now turning to our capital investments. As a reminder, we define these as a combination of cash CapEx plus equipment finance leases. Capital investments were $26.3 billion in the fourth quarter, and we think that run rate will be reasonably representative of our 2025 capital investment rate. Similar to 2024, the majority of the spend will be to support the growing need for technology infrastructure. This primarily relates to AWS, including to support demand for our AI services, as well as tech infrastructure to support our North America and international segments. Additionally, we're continuing to invest in capacity for our fulfillment and transportation network to support future growth. We're also investing in same-day delivery facilities and our inbound network, as well as robotics and automation, to improve delivery speeds and to lower our cost to serve. These capital investments will support growth for many years to come. Turning to our revenue guidance for Q1, net sales are expected to be between $151 billion and $155.5 billion. I'd like to highlight two items impacting our Q1 revenue guidance. First, we estimate the year-over-year impact of changes in foreign exchange rates based on current rates, which we expect to be a headwind of approximately $2.1 billion in Q1 year over year, or 150 basis points. As a reminder, global currencies can fluctuate during the quarter, and just as we saw in Q4 with the strengthening of the dollar versus most other currencies. Second, a reminder that we are comping the impact of last year's leap year. The extra day contributed approximately $1.5 billion of additional net sales across our businesses in Q1 2024, or about 120 basis points to the year-over-year growth rate, which impacted all segments. Q1 operating income is expected to be between $14 billion and $18 billion. This guidance includes the estimated impact of certain updates to the useful life of our fixed assets. I'll provide a bit more detail in a moment, but on an aggregate basis, we estimate this will decrease full year 2025 operating income by approximately $400 million for the assets on our balance sheet as of December 31st, 2024. First, in Q4, we completed a useful life study for our servers and networking equipment and observed an increased pace of technology development, particularly in the area of artificial intelligence and machine learning. As a result, we're decreasing the useful life for a subset of our servers and networking equipment from 6 years to 5 years, beginning in January 2025. We anticipate this will decrease full year 2025 operating income by approximately $700 million. In addition, we also early retired a subset of our servers and network equipment. We recorded a Q4 2024 expense of approximately $920 million from accelerated depreciation and related charges, and expect this will also decrease full year 2025 operating income by approximately $600 million. Both of these server and network equipment useful life changes primarily impact our AWS segment. Lastly, we also completed a useful life study for certain types of heavy equipment used in our fulfillment centers and are increasing the useful life from 10 years to 13 years, beginning in January 2025. We anticipate this will increase full year 2025 operating income by approximately $900 million. As we turn the page to 2025, we're energized by the great work our teams have delivered. We'll remain focused on driving an even better customer experience, and we believe putting customers first is the only reliable way to create lasting value for our shareholders. With that, let's move on to your questions.
All right, here we go.
At this time, we will now open the call up for questions. We ask each caller to please limit yourself to one question. If you would like to ask a question, please press star, then 1 on your keypad. We ask that when you pose your question, you pick up your handsets to provide optimum sound quality. Once again, to initiate a question, please press star, then 1 on your touch-tone telephone at this time. Please hold while we pull for questions. Thank you. Our first question comes from the line of Mark Mahaney with Evercore ISI. Please proceed with your question.
Thanks. Two quick questions. So, Brian, that's $100 billion CapEx we should think about in 25. And then, Andy, would you describe that AWS growth as being currently moderated down by supply constraints? Do you see those across the industry, or do you see those materially impacting AWS today? Thank you very much.
So I'll take both those, Andy. On the CapEx side, as Brian mentioned earlier, we spent $26.3 billion in CapEx in Q4, and I think that is reasonably representative of what you can expect in annualized CapEx rate in 2025. The vast majority of that CapEx spend is on AI for AWS. It's, the way the AWS business works, and the way the cash cycle works, is that the faster we grow, the more CapEx we end up spending, because we have to procure data center and hardware and chips and networking gear ahead of when we're able to monetize it. We don't procure it unless we see significant signals of demand. And so when AWS is expanding its CapEx, particularly in what we think is one of these once-in-a-lifetime type of business opportunities like AI represents, I think it's actually quite a good sign, medium to long term, for the AWS business. And I actually think that spending this capital to pursue this opportunity, which, from our perspective, we think virtually every application that we know of today is going to be reinvented with AI inside of it, and with inference being a core building block, just like compute and storage and database. If you believe that, plus that altogether new experiences that we've only dreamed about are going to actually be available to us with AI, AI represents for sure the biggest opportunity since cloud, and probably the biggest technology shift and opportunity in business since the internet. And so I think that both our business, our customers, and shareholders will be happy medium to long term that we're pursuing the capital opportunity and the business opportunity in AI. We also have CapEx that we're spending this year in our stores business, really with an aim towards trying to continue to improve the delivery speed and our cost to serve. And so you'll see us expanding the number of same-day facilities from where we are right now. You'll also see us expand the number of delivery stations that we have in rural areas so we can get items to people who live in rural areas much more quickly. And then a pretty significant investment as well on robotics and automation so we can take our cost to serve down and continue to improve our productivity. So that's the CapEx piece. I think the second question you asked, Mark, is really around AWS growth and whether this is being moderated down at all by supply chain constraints. Well, it is hard to complain when you have a multi-billion-dollar annualized revenue run rate business in AI, like we do, and it's growing triple-digit percentage year over year. It's hard to complain. However, it is true that we could be growing faster if not for some of the constraints on capacity, and they come in the form of I would say chips from our third-party partners coming a little bit slower than before, with a lot of midstream changes that take a little bit of time to get the hardware actually yielding the percentage healthy and high quality servers we expect. It comes with our own big new launch of our own hardware and our own chips in Trainium 2, which we just went to general availability at reInvent, but the majority of the volume is coming in really over the next couple quarters, the next few months. It comes in the form of power constraints, where I think the world is still constrained on power from where I think we all believe we could serve customers if we were unconstrained. There are some components in the supply chain, like motherboards too, that are a little bit short in supply for various types of servers. So, I think the team has done a really good job scrapping and providing capacity for our customers so they can grow. We're still growing at a pretty reasonable clip, as I mentioned earlier, but I do think we could be growing faster if we were unconstrained. I predict those constraints really start to relax in the second half of 25. And as I said, I think we could be growing faster, even though we're growing at a pretty good clip today.
And our next question is from Eric Sheridan with Goldman Sachs. Please proceed.
Thanks so much for taking the question. I'll just ask one that's building on Mark's questions there. Andy, when you think about the news that came out of China over the last couple of weeks and think longer term about bending the cost curve lower with AI, I understood the commentary around CapEx for 2025. But when you look at where you sit in the industry, the move towards open source, elements of custom silicon, how do you think about bending the cost curve and either speeding up or amplifying time deployment to market, or possibly higher returns on capital for AI? Thanks so much.
Well, I'd say a few things because there are a few questions built into that. First of all, I think like many others, we were impressed with what DeepSeek has done. I think in part impressed with some of the training techniques, primarily in flipping the sequencing of reinforcement learning being earlier and without the human in the loop. We thought that was interesting ahead of the supervised fine tuning. We also thought some of the inference optimizations they did were also quite interesting. For those of us who are building frontier models, we're all working on the same types of things, and we're all learning from one another. I think you have seen and will continue to see a lot of leapfrogging between us. There is a lot of innovation to come. And, I think, if you run a business like AWS and you have a core belief like we do, that virtually all the big generative AI apps are going to use multiple model types, and different customers are going to use different models for different types of workloads, you're going to provide as many leading frontier models as possible for customers to choose from. And that's what we've done with services like Amazon Bedrock. And it's why we moved so quickly to make sure that DeepSeek was available both in Bedrock and in SageMaker, faster than you saw from others. And we already have customers starting to experiment with that. I think one of the interesting things over the last couple of weeks is sometimes people make the assumptions that if you're able to decrease the cost of any type of technology component, in this case, we're really talking about inference, that somehow it's going to lead to less total spend in technology. And we have never seen that to be the case. We did the same thing in the cloud, where when we launched AWS in 2006, where we offered S3 object storage for 15 cents a gigabyte and compute for 10 cents an hour, which of course is much lower now, many years later. People thought that people would spend a lot less money on infrastructure technology. And what happens is companies will spend a lot less per unit of infrastructure. And that is very, very useful for their businesses. But then they get excited about what else they could build that they always thought was cost prohibitive before. And they usually end up spending a lot more in total on technology once you make the per unit cost less. And I think that is very much what's going to happen here in AI, which is the cost of inference will substantially come down. What you heard the last couple of weeks out of DeepSeek is a piece of it, but everybody is working on this. I believe the cost of inference will meaningfully come down. I think it will make it much easier for companies to be able to infuse all their applications with inference and with generative AI. And I think it's going to, if you run a business like we do, where we want to make it as easy as possible for customers to be successful building customer experiences on top of our various infrastructure services, the cost of inference coming down is going to be very positive for customers and for our business.
And the next question is from Doug Anmuth with JP Morgan. Please proceed.
Thanks for taking the questions. I'll stick with AWS to start. Just, Brian, maybe you can talk a little bit more about margins there, just given that they've kind of moved between the mid-20s to high 30s over the past 2 years. How should we think about that more normalized, especially as you're investing that much more in generative AI? And then just on the store side, can you talk about the impact of less volume going through your shipping partner, UPS, going forward? And are you able to manage that incremental shipping that's required? Thanks.
Yeah, sure, Doug. Thanks for your question. First on AWS, yeah, we have seen a lot of fluctuation in operating margin in AWS. And, we've said historically that they will be lumpy, as you say, over time. And, the stage we're in right now, AI is still early stage. It does come originally with lower margins and a heavy investment load, as we've talked about. And in the short term, over time, that should be a headwind on margins. But over the long term, we feel the margins will be comparable in non-AI business as well. So, we're very pleased with the strong growth, focus on driving efficiencies in all of our data centers, saving power, reusing power in new generative AI applications, and just generally reducing costs. So, very pleased with the performance of the AWS team, and look forward to strong 2025.
I'll take the UPS one, which is really UPS has been a partner of ours for many years, and we expect that we'll continue to be partners with UPS for many years. As you know, increasingly over the last several years, particularly accelerated by the pandemic, we have shipped a much larger percentage of our shipments through our own logistics network, our own last mile transportation network. And yeah, I think that's in part because we needed to scale up so fast in the pandemic with everything being shut down and needing to serve more of the total market segment share of retail units during that time, and needing to do it at a low cost structure because, of course, our customers expect low prices, and that's the nature of the business. I think UPS has decided that that serving Amazon is a lower margin for them, and so I think they've walked away from some of the volume that they otherwise could have had in the partnership. We're able to handle it with our own logistics capability, and we'll see how it continues to evolve.
And the next question comes from the line of Brian Novak with Morgan Stanley. Please proceed.
Thanks for taking my questions. Andy, maybe to drill a little bit into the robotics acceleration that you talked about, any new data points, things you can share on learnings from Shreveport, and how do we think about sort of the scalability of savings or the timing that we could see a real impact on profitability from robotics? And then maybe just a bigger picture, Gen AI, GPU-enabled changes. You have other examples of how you see the Amazon retail shopping experience changing throughout 2025 as you're better using Gen AI or GPU-enabled machine learning and things?
Yeah. Okay. Well, on the robotics piece, what I would tell you is, since we've been pretty substantially integrating robotics into our fulfillment network over the last many years, we have seen cost savings, and we've seen productivity improvements, and we've seen safety improvements. And so we have already gotten a significant amount of value out of our robotics innovations. What we've seen recently, and I think maybe part of what you're referencing in Shreveport, is that the next tranche of robotics initiatives have started hitting production, and we've put them all together for the first time as part of an experience in our Shreveport facility. And we are very, very encouraged by what we're seeing there, by both the speed improvements that we're seeing, the productivity improvements, the cost to serve improvements. It's still relatively early days, and these all being put together are only in Shreveport at this point, but we have plans now to start to expand that and roll that out to a number of other facilities in the network, some of which will be our new facilities and others of which will retrofit existing facilities to be able to use those same robotics innovations. I'll also tell you that this group of, call it a half dozen or so new initiatives, is not close to the end of what we think is possible with respect to being able to use robotics to improve the productivity, cost to serve, and safety in our fulfillment network. And we have kind of the next wave that we're starting to work on now. But I think this will be a many-year effort as we continue to tune different parts of our fulfillment network where we can use robotics. And we actually don't think there are that many things that we can't improve the experience with robotics. On your other question, which is, I think, really about how we might use AI in other areas of the business than AWS, maybe more, and I think you asked about our retail business. The way I would think about it is that there's kind of two macro buckets of how we see people, both ourselves inside Amazon as well as other companies using AWS, how we see them getting value out of AI today. The first macro bucket, I would say, is really around productivity and cost savings. And in many ways, this is the lowest hanging fruit in AI. And you see that all over the place in our retail business. For instance, if you look at customer service and you look at the chatbot that we've built, we completely re-architected it with generative AI. It's delivering, it already had pretty high satisfaction. It's delivering 500 basis points better satisfaction from customers with the new generative AI infused chatbot. If you look at our millions of third-party selling partners, one of their biggest pain points is because we put a high premium on really organizing our marketplace so that it's easy to find things. There's a bunch of different fields you have to fill out when you're creating a new product detail page, but we've built a generative AI application for them where they can either fill in just a couple lines of text or take a picture of an image or point to a URL. And the generative AI app will fill in most of the rest of the information they have to fill out, which speeds our getting selection on the website, easier for sellers. If you look at how we do inventory management and trying to understand what inventory we need in what facility at what time, the generative AI applications we've built there have led to 10% better forecasting on our part and 20% better regional predictions. In our robotics we were just talking about, the brains in a lot of those robotics are generative AI infused that do things like tell the robotic claw, what's in a bin, what it should pick up, how it should move it, where it should place it in the other bin that it's filling. So it's really in the brains of most of our robotics. So we have a number of very significant, I'll call it productivity and cost savings efforts in our retail business. They're using generative AI, and again, it's just a fraction of what we have going. I'd say the other big macro bucket are really altogether new experiences. And again, you see lots of those in our retail business, ranging from Rufus, which is our AI infused shopping assistant, which continues to grow very significantly, to things like Amazon Lens, where you can take a picture of a product that's in front of you. Check it out in the app. You can find it in the little box at the top. You take a picture of an item in front of you, and it uses computer vision and generative AI to pull up the exact item in a search result, to things like sizing, where we basically have taken the catalogs of all these different clothing manufacturers and then compared them against one another, so we know which brands tend to run big or small relative to each other. So when you come to buy a pair of shoes, for instance, it can recommend what size you need, to even what we're doing in Thursday Night Football, where we're using generative AI for really inventive features like defensive alerts, where we predict which player is going to blitz the quarterback, or defensive vulnerabilities, where we're able to show viewers what area of the field is vulnerable. So we're using it really all over our retail business and all the businesses in which we're in. We've got about 1,000 different generative AI applications we've either built or in the process of building right now.
And the next question comes from the line of John Blackledge with TD Cowen. Please proceed.
Great, thanks. Could you talk about the current speed of delivery, maybe how much more room to go there, and how is it driving the Everyday Essentials business? And then somewhat relatedly, any further color on inbound network efficiencies you would expect to see this year as you guys try to continue to lower the cost to serve? Thank you.
Yeah, I would say on speed of delivery that we measure this very carefully, and we measure both what the conversion rate is of somebody who views a product detail page with a faster delivery promise versus those that are slower, as well as what we see downstream from customers once they've bought with a fast promise and what they end up buying throughout the year. And we have not yet seen diminishing returns and being able to continue to improve the speed of delivery. It doesn't mean that there won't be instances in which people are happy to take products later. We have a program where if people want to pick a day during the week where they want to combine a bunch of their shipments and have it delivered then to be more sustainable and more environmentally friendly, they can. And we have plenty of customers who choose that, but we time in and time out see that people choose to buy from us more frequently when we're able to deliver to their homes or wherever they are much more quickly, and it leads to their actually using us for more of their everyday purchases when we can deliver more quickly. And I think that if you look at what we're doing with Prime Air, the promise there is for a number of items that we'll be able to deliver items to customers inside an hour. And I think when you're ordering Everyday Essentials where you need something more quickly, it's a big deal. And you see it's had a big impact on our Everyday Essentials. It's had a big impact on our pharmacy business, where people are able to get items same day now in lots of cities throughout the U.S., and they're just using us much more frequently than they had before. On the inbound network efficiencies, what I would tell you is we've made a pretty significant architectural change in our inbound network that we've been working on for the better part of a year, that we rolled out just a few months ago. Again, what we find when we make big architectural changes like this is that you tend to get some low-hanging fruit efficiencies early, but then there's all sorts of tuning and refinement you have to do once you actually see it working live across the really vast network. And we have all sorts of ways here where I think it's early, and I think we're going to get additional efficiencies throughout the year. But I expect that we'll have opportunities to keep taking our cost to serve down this year, and that'll be a big part of it.
And our final question comes from the line of Michael Morton with MoffettNathanson. Please proceed.
Hi, thank you so much for the question. I wanted to follow up on Andy's remarks about how you're using AI within the Amazon e-commerce experience. But I wanted to talk about the other side of the coin, and that's really the e-commerce discovery process that leads people to Amazon. There's a lot of companies rolling out agents and assistants, and I would love to hear how Amazon is planning for potential disruption in this funnel and what the plans are. You spoke about Rufus, maybe make that more prominent, but what you think the changes coming to the e-commerce funnel over the next several years would be great.
Well, I would say that I think retailers, ourselves, and probably lots of other retailers are all going to have their own say on how they want to interact with agents. I think that it's an emerging space. And if you think about the investments that we've made in our fulfillment network, in our website, in all the selection that we've built, how we organize it, most retailers are going to have kind of terms in which they're going to interact with agents, and we'll be no different that way. And I think that I do think that Rufus, if you look at how it impacts the customer experience, and if you actually use it month to month, it continues to get better and better. It's already, if you're buying something and you're on a product detail page, our product detail pages provide so much information that sometimes it's hard if you're trying to find something quickly to scroll through and find that little piece of information. And so we have so many customers now who just use Rufus to help them find a quick fact about a product. They also use Rufus to figure out how to summarize customer reviews, so they don't have to read 100 customer reviews to get a sense of what people think about that product. If you look at the personalization, really most prominently today, your ability to go into Rufus and ask what's happened to an order, or what did I just order, or can you pull up for me this item that I ordered 2 months ago. The personalization keeps getting much better. And so, we expect throughout 2025 that the number of occasions where you're not sure what you want to buy and you want help from Rufus are going to continue to increase and be more and more helpful to customers.
Thank you for joining us on the call today and for your questions. A replay will be available on the Investor Relations website for at least 3 months. We appreciate your interest in Amazon and look forward to talking with you again next quarter.
All right, there you go. Amazon is done. Look, that call wasn't too crazy too different from the last call that we had in Q3. The only thing, so what I mean, it's not too different. They talked about Rufus. They talked about implementing LLMs. They talked about foundation models getting some benefit, which we'll talk about in terms of their relationship with Palantir and Robinhood that they mentioned that are using some of the new Nova foundation models. They talked about AI and robotics. Andy Jassy gave his kind of opening soliloquy about this idea that AI is the biggest opportunity of a lifetime. He did say it's definitively bigger than the internet opportunity. And if it is bigger than the internet opportunity, then at that point, that's something you take advantage of from a CapEx perspective. Now, the magic number that everyone's hoping for is $104 billion. The thing about this number is that it is the result of Q4's CapEx, which is 26.2. And he basically said multiply that by 4. And that gives you your CapEx guidance for 2025, which is and ends up being 104 to 105 billion. That's not up that much from last year. If I'm not wrong, that's up like maybe 10 or 15 billion. So it's a good increase, but it's not like a dramatic Google or Meta or even Microsoft type of increase. But nonetheless, NVIDIA is catching a little bit of a bid here because 105 billion is 105 billion. Not all of that's going to NVIDIA, but some of it will, or at least the amount of it that should be going to NVIDIA as it was last year as a proportion will be going. Now, NVIDIA tanked to 126 originally when Amazon announced that they're using their own custom ASICs to build their own chips. That doesn't mean they're not using NVIDIA GPUs anymore, but that does mean that they're putting a little bit more of an emphasis on some of the internal things they're making, which obviously could lead to people feeling a little bit bearish on NVIDIA. There was that Bloomberg article, I think 3 months ago, where the headline, it was like a 17-minute article, was that Amazon's going to replace their chips with NVIDIA. Or Amazon's going to replace NVIDIA chips with their own chips, but that's not necessarily happening to the extent that I think some people thought a couple months ago. So NVIDIA right here, 128, it's down 0.5%, nothing too crazy, recovered from that 125 low or 126.24 low after the $105 billion number was announced. Amazon is down 4.49%, was not able to recover from the initial drop. So if you've got covered calls on Amazon tomorrow, those will probably do okay. But look, this is kind of expected, dude. This was really expected. The stock was at all-time high. Same thing as Google. It kind of makes sense that it's taken a breather, just like Google is. Meta is the only one that had numbers that were just so amazing. I mean, they beat EPS by $2. It was hard for the street to deny it. And that's why Meta pumped. But outside of that, pretty much every Mag 7 has had a negative or flat reaction that ends up getting eaten up in terms of the dip. But I think that's healthy. I don't think it, maybe Amazon probably shouldn't be $250, $260 in February of 2025 when they've got a lot to still prove throughout the year in terms of building the overall business. So I think it's a relatively simple reaction. It's not that crazy. And the earnings call didn't have anything too exciting or too weird to listen to in terms of anything that's negative or positive for the company. Pinterest is still up 18%. Affirm's up 10%. Elf Beauty is down 25%. Whatever they're saying on the call is not good enough to stop this thing from continuing to collapse. Cloudflare's up 11%, Fortinet's up 6%, CleanSpark's up 6%, Take-Two up 6.5%, Monolithic Power up 12%, Expedia up 9%, Doximity up 22%, Google is flat, and Billings is down 30%. So Billings and Amazon, they're the ones that got hit the most. Or sorry, Billings and Elf got hit the most. Amazon's down 4%. Everything else is actually green. So overall, good earnings. I mean, not a bad earnings for a lot of these names that we have right now. Did anyone get anything out of that call that I didn't mention? I mean, the majority of the call felt very similar to Q3. It's not like they said anything that different. It was big AI is an opportunity. We have to spend. AWS growth is good. They did guide for operating income margins to be slightly lower, but I mean, that's not that big of a deal at the end of the day. So overall, it just wasn't too crazy. Here was the mention of Palantir on the call that they had.
Thousands of AWS customers are already taking advantage of the capabilities and price performance of Amazon Nova models, including Palantir, Deloitte, SAP, Dentsu, Fortinet, Trellix, and Robinhood. And we've just gotten started. At the top layer of the stack, Amazon Q is the most.
I know that you guys are probably going to have fun with with that one from a meme perspective. I mean, Jason is already posting some things, as you can see right here. that was a good one. Bro almost went into the camera. I mean, as soon as I heard Palantir, there you go. I was excited. I was a little excited there. But essentially what they're saying is that Palantir are using their foundation models, right? The Nova foundation models that they came out with a couple of months ago. Chad says they should pay us for using her name. And those models, obviously Palantir is a customer of AWS. Palantir has a 10-year, $1.95 billion cloud computing provider agreement if you look at their 10K. Now, no one knows exactly who that provider is, but we're assuming it's Amazon. I mean, a lot of us in the community have figured out it's probably AWS. It could be a mixture of GCP and Azure, but we think the majority of it is AWS. So it makes sense. Palantir and Amazon have had a very good, productive working relationship over the past 5 years. And now with these new foundation models that can get integrated into something like AIP, it makes sense that Palantir gets mentioned on the earnings call. One thing, I think we can't take it in light that they mentioned Palantir, right? I mean, Microsoft mentioned Palantir, Amazon mentioned Palantir. Palantir is now the big boy on the block. Obviously, it's not like big tech in terms of Microsoft or Amazon, but the fact that those companies want to mention their name, right? They want to say their name. I mean, it does show that if you are the hottest AI company in the world, the big guys want to be associated with you. And the big guys being associated with you means that you get to come into the club. You get to come into the club. You get other people that like you now that you're in the club. They want to know more about why you're in the club. And it's a compounding effect. The rich get richer. Palantir suffered for 20 years to get to this point, so they deserve it. But it's a beautiful thing on how momentum continues to build more momentum. The news we got today was Palantir is now bringing Grok, Elon's XAI models, into the enterprise via AIP as well. So you've got a lot of these companies continuing to use Palantir, and it is also proving the thesis that the ontology is what's more important than the actual LLM itself. So they also mentioned Robinhood as well. They mentioned Robinhood using those foundation models. That makes me also excited for Hood, because Hood hasn't released any AI features yet, any real AI agentic ideas. And they have 3 events this year. If Hood comes out with some serious AI shit, like some real AI shit in finance, because we haven't really seen any AI in finance that's like user-friendly and like people actually enjoy engaging with, that could be a massive tailwind for Amazon or for Robinhood as well going into 2025. Amazon right here down 4.2%. We have an update on the option flow from Palantir. Let's take a listen to that here right now.
After the bell on Monday, and even with the record gains, options traders are still piling in. Mike Coe joins us here with the action. Mike.
Yeah, so we're seeing obviously very big moves and very big volumes. This was one of the busiest single stocks today. Traded about 1 million calls, actually, double its average daily volume. And the most active contracts were, for next week anyway, the 110 and 115 calls. And we saw a buyer of about 12,000 110, 115 call spreads, paid about $1.25. So that's basically spending about $1.5 million in premium betting that the rally that we saw could continue. And by the way, when they put that trade on, stock was still trading about $1.07. So it's already profitable.
Based on what you see, Mike, does it look like retail traders are doing most of the options trading?
Well, I mean, the one I just referenced, I don't think there's too many retail traders who are making $1.5 million bets for just 1 week, but there is a tremendous.
I mean, like, was I not saying that in the morning? Right? You got your options expert here saying, I don't think a lot of retail traders are making 1 in a million half bets for 1 week. Come on, bro. Like this is like, sometimes people want to push back and say, no, it's not big money. It's all retail. It's like, dude, I mean, maybe it's not that easy for retail to pull up $1.5 million for a 1 week bet. That seems a little bit more big money. Or even if it is retail, it's retail whales, not even if it's not institutions, but those are bigger people getting into the name.
Amount of retail flow as well. I mean, it's kind of similar to what you see in the likes of Nvidia and Tesla and so on. This is taking on almost a meme stock kind of a tone to it right now.
Right. All right, Mike, thank you. Mike Coe. Our next guest.
Bro, if you're going to say it's a meme stock, but then say it's not retail, then that means the big boys are playing with the memes. And if the big boys want to make it a meme, okay. But if it's not a meme, then I guess the big boys are getting bullish on it. One thing I did see, though, when I was looking at some of the options flow myself, Palantir, by the way, after hours is 111.94. Absolutely incredible. I was looking at the $130 call option for March 14th. Is that the right one? March 14th, which is 36 days out. That has, 10,000 of those are open. March 13th, 10,000 open calls, 130, 3,000 of them traded today, 3,500. So that was the biggest one I saw today. The other ones have barely a couple hundred open, but 130 a month from now is getting some love. And then 160 on March 21st has 8,000 that are open. Those had 1,900 of them traded today in volume. So, I mean... All right, what is everyone's raw feeling? Can we talk about this? What is everyone's raw feeling? We'll go through some of the other companies, but for those that wanted the update on Amazon, good earnings, missed on cloud by a little bit, good call, stocks trading off because it was at all-time highs. It is what it is, right? That's all we got in the context of Amazon. Nothing too surprising, which is a good thing because it's Q4 2024 earnings. But what is your guys' raw reaction to Palantir? I mean, this is like, I don't think anyone can focus on work. No one can focus on their girlfriend. In my situation, my 5 girlfriends, I can't focus on any of them because I'm focused on the one that I'm not going to let go away, which is which is Palantir. It's like there's nothing to focus on. What do you focus on when this thing is up 10% in a day, $253 billion market cap? I mean, this is just I don't know the words. I don't know how to describe it. I don't know how to describe it. Does it have to go all the way back down to 50? It could. Does it have to? I don't think so. I don't think so. I mean, does it have to go back to 75? Sure, it could go back to 75. Will it? I don't think so. It could. Anything's possible. It's just now, again, we were talking about this in the morning. Palantir has been re-rated 4 times in 2024. From 16 to 24, that was after Q4 2023 earnings, it got re-rated. Then from 24 to 40, that was kind of August 5th, it got re-rated. Then from 40 to 80, I would say it got re-rated because you had NASDAQ and S&P in the span of 3 months. That was a massive re-rating and that doubled the stock in the span of 3 months. Now from 80 to 112, let's just call it 80 to 100, I think it got re-rated after that earnings. That doesn't mean it can't visit 80 or 75 or 90 again. And I think a lot of us wouldn't be surprised by that. We would probably expect that, and it would be kind of normal, healthy consolidation. But does it have to? The answer is no. Just like it didn't have to revisit 40 after it got to 80. So this thing is taking on a life of its own. It is absolutely taking on a life of its own. And it's pretty incredible. It's pretty incredible. It's going to 36 where I sold. I don't know, dude. 36 is going to be... Like, look, even if you give me a valuation argument for why it deserves to be $36, which would be like, what, $85 billion market cap or something like that, you can give that argument. The problem is this is momentum. Like, momentum is momentum. And maybe momentum dies out, but if Palantir has the earnings growth to sustain some of the momentum, even though I know the momentum is pretty high, it doesn't have to die out, and it definitely doesn't have to go back to 36. And if it takes a nasty dip, there's plenty of people that would be happy to get back in. And it's just, again, the catalyst for it to take a dramatic 50, 60, 70% decline has to be they mess up earnings in some dramatic way, or there's a recession, right? A macro headwind, inflation reaccelerates dramatically. And from all the data we look at every single day on the show, data's great. The data's freaking amazing. I mean, this stat, I didn't get to mention it, but I said it, or I showed it while Sam was talking. S&P 500 is S&P 500 companies' earnings seasons are now more than halfway through. So more than 250 out of the 500 companies have reported. 54% of companies have a 78% EPS beat rate. I mean, this is just incredible. 78% of the 54% have beat. So 78% of the about 250 companies that have reported have beat earnings per share. So they beat on earnings. And the ones that have missed have not been dramatic misses at all. Like even Elf with a little bit of a miss on earnings today, that they had other reasons why they fell, but it's not like they are missing horribly. So yeah, those numbers do not indicate any economic slowdown. Dude, and this is different from Tesla in 2021. Tesla in 2021, you had a obvious, in hindsight, economic meltdown coming with raising of rates and inflation being quote unquote transitory. That was not transitory. And so Tesla had to take a dip, just like every other stock in the market. For the next 4 years, what is that obvious momentum catalyst to the downside outside of inflation reaccelerating, which I don't think is happening, and outside of earnings growth being bad, which obviously is not happening, at least for Q4, it would have to be some type of recession. And we get non-farm payrolls tomorrow, but if we're not having a recession, I don't know, dude. This momentum on Palantir is a life of its own, and you need something really big to take it down. Yeah, China invades Taiwan. I mean, if that happens, then yeah, like shit hits the fan. But excluding something super external and macro driven and like geopolitical, I don't know what takes it down that hard. And the reason I'm harping on this is because I know a lot of people are up on their Palantir. I know a lot of people are also very reasonable that wouldn't go crazy if this thing came back down to 85 or 90 and you would like understand it. But I also think a lot of people are just wondering, does it really have to come down? Like, does it have to? Like, we would accept it if it does. We get it. We understand. But does it have to? And maybe it doesn't have to. Yes, Chad quitting would absolutely cause a meltdown. So Chad, if you're still here, I know you're never going to quit, but please make sure you never quit. That would cause some issues. But outside of that, do we even need any other stock? You know, there was a Reddit post I saw back in April of 2024, or maybe it was June. And I remember this Reddit post because there was a thread. I don't really go on the Palantir Reddit too much because I don't know. I've never been a Reddit person, right? So I don't really use Reddit. But someone was like, Palantir is a stock that just goes up. We found it. We found it. Like, the name of the thread was, we found a stock that only goes up. And it was funny because I think it was at $35 or something, and everyone was laughing about it, yada, yada. Like, you know, it just only goes up. That person was 1,000% correct, at least now, 8 months later. This is a stock that only goes up. And obviously we'll probably see volatility in the future, but I mean, it's pretty incredible, dude. It's pretty freaking incredible. Call Steve. I don't know if Steve's going to pick up. I'll call him. Let's see if he's free. He's been in meetings all day. He's let's just say he doesn't love the price action that we're seeing, but he's accepted that this is a life of its own. Let's see if he picks up on this one. Alpha is still down 20%. Hood actually moved after hours. I don't know why Hood moved. 53.40, 53.24 now, basically where I bought it at today. Yeah, Steve's not picking up. Steve's not picking up. If he calls me back, then I'll pick up, but he's probably busy right now. But again, when I talked to him in the morning, he said he's going to have to write a check. And if you got covered calls, you just got to write a check, right? Now, granted, if you're going to write a check, do you write a check when it's at freaking 112 or do you wait till it pulls back to 100? Because every dollar it goes up, those covered calls become more expensive in terms of rolling. So it's like, but dude, if it goes back to 100, like that already is like a material decline from where it's at right now, right? And I'm not saying it can't do that. I'm just saying like every dollar it goes up, you start normalizing a little bit of these levels. And then if it comes back down, it's like, oh, there's a dip. And you get people that get excited about buying that dip. So there's just so much momentum. You would need something so like, again, interest rates going up. That was just like, boom, that killed Tesla, killed them because it's a car company. You can't have rates go up. How are people going to finance the cars, right? At the end of the day, it's AI, robotics. Yeah, but it's a car company. And it definitely was a car company more so in 2022 when shit was hitting the fan. Palantir doesn't have rates going up as a catalyst. I mean, unless the US government stops procuring from them, but we actually see Doge as a catalyst more than not. Like I'm trying to think what is the negative reason that would get Palantir to materially see weakness in earnings growth, momentum, excitement, yada, yada. I can't think of it. Carp's got a freaking book coming out. I mean, it's like, see, you either think one, so Connor's comment right here is what do you mean by normalizing? It's a bubble ready to pop. It's one or the other. It's either a bubble ready to pop or it's going to normalize these levels. It's one or the other. It's one or the other. And I'm humble enough to admit it's one or the other. I'm not claiming that it's definitely going up, but I'm also not claiming it's definitely going down 50, 60%. But it's going to be one or the other, I think. I mean, maybe I guess the middle line is it pulls back to like 85 and it consolidates there for the rest of the year. That could happen as well. But this thing is, I don't know, dude, the level of re-rating we saw from 85 to 112 in terms of the fact that it barely went below 100 the past couple of days for 5-10 seconds. Like it's just this, like whatever volume came in from whatever institutions, hedge funds, or retail is very indicative of wanting more of this stock. And everyone knows the valuation. Everyone knows that it's extended. Everyone knows that it's expensive. So it's like no one's, I mean, you might have some retail that's buying that just doesn't care. But if you're an institutional investor, like, you know, $250 billion, $4 billion in revenue, like you get it, that's expensive. But still you're buying. And so if you're still buying, then it's like, well, there's something that's getting you to buy outside of just the pure numbers. Grab right here is up a little bit after hours. ELF down 24%, 67.45. I will do some deep digging into ELF to try to figure out if there's an opportunity here. Down 24%, but right now it doesn't look pretty. And the China headwind doesn't make it look pretty either. Why do you think something so significant has to happen to bring Palantir down? Well, I just think the media attention and momentum around it is heavy. Like, Tesla was not going to go from 400 back to 100 unless you had something significant, because the Tesla cult, the Tesla faithful are so strong, but you had something pretty significant. You had the Fed raising rates to the highest level in 40 years. That was a pretty significant move. Otherwise, because there's a lot of Tesla people that didn't sell during that time, right? They just averaged down, bought more. It was dead money for a couple of years, but the big guys kind of saw the macroeconomic headwinds coming and they got out of it. I think if big guys are in this name, they can easily get out of this name, but they've got to see a reason to get out. And I don't want to hear that retail pumped at 65 billion in the past 5 days. I don't want to hear that because I don't think that's true. Unless I'm grossly underestimating the amount of money retail has. But you guys saw in the options video that we just saw on CNBC, you know, does someone have $1 million in premium they can put up in a week for Palantir? Usually retail doesn't tend to have that much money as easily. It's a snowball effect. It is absolutely a snowball effect. It's momentum. Momentum builds momentum. If there's any universal truth in life, it's that once you get momentum, you can keep getting more momentum, and that builds even more momentum, and then it just It can take you to another stratosphere. Amit, let's be honest, this does not end well, but can still get way crazier before that moment comes. I don't know if this doesn't end well. I don't know. There's a shot it doesn't end well, but what does end well mean? What does end well? Like, if we go back to even 65, that would suck. I get it, because it's almost like a 50% drawdown. But does that mean it didn't end well? No, because 65 would still be almost $150 billion market cap. The decline is going to be ugly, but any regular Palantir bull understands that 150 billion is still an amazing valuation. 250 is just like, all right, that's the cherry on top. But like, if it goes back to, that's not that crazy. Does end well mean we go back to 85, 90? Or does end well mean we go back to 30? If it does not end well means we go back to 30, then yeah, sure, that does not end well. Even though, goodness gracious, the amount of people that would buy that sucker at 30 if it gets there. But like, I don't think that's happening. I don't see that dramatic of a decline given how the narrative has shifted. And given the macro is holding up. Would you regret holding on? Absolutely not, dude. I would not regret holding it if it went back to 65 or 75 or 80. Again, I said this in the morning, but I don't need the liquid cash from Palantir to make more moves in the market. And so if you really do need that cash to do something, then yes, you probably would have some regret. But if you don't, and you're long, and as Sam said, if you've already held on this long, you might as well keep holding. You would buy that dip if it goes down. So like, it would be annoying to see, your position go down by 50%, but it's not like, or it's one of the things, if you're going to be a growth stock investor, you have to accept that type of volatility. I mean, you're not you're investing in Palantir versus Coca-Cola for a reason, right? And it's just part of the game. I might regret buying 120 calls. Yeah, I'm not a buyer of call options here on Palantir. I'm not doing that. I know some people probably think it's a great decision. I'm not doing that, but still, I don't think it has to go back down to like 65. Quan Tess says we will retrace at some point, but hey, we need some buying opportunities. Yeah, see, and this Tess has been a bull since like $7, right? She's been here for a long time. So if we will retrace at some point, but the mentality is we need some buying opportunities, there you go. This is how dude, I'm telling you, this is how retail's thinking of it. Everyone thinks retail's dumb money. Retail was smart money 2 years ago. The smart money is becoming dumb money. And if there's buying opportunities, retail will take advantage of that, just like a bunch of you did at 65, 63 when we were there early January. Loaded up again. And now we're here. It took 5 years for Tesla to recover. So just imagine that 110 is the top for the next 5 years. Well, that's also the risk you take as an investor in a growth stock, right? Like if you top out and then you decline and it takes 5 years to get back there, it sucks. It's tough to deal with that. But again, and I remember making this argument back in October when we really started getting into the 40s, and I started seeing the FinTwit people start making the Tesla comparison for 2021. Tesla peaked in November 2021 at 414, and it was at 250 by March of 2022. Palantir is at 112 in February of 2025. It should be back down to like, honestly, the 50s if you were making that same analysis in terms of the trajectory of the timeline. Now, maybe the timeline's off from Tesla 2021 to 2022 versus Palantir 2024 to 2025, but still, if there is not a macro catalyst like the raising of rates, I don't know if Palantir has to have that same Tesla 2021 type of trajectory to the downside. It could happen, but I don't think it needs to happen. But it's pretty incredible. It's pretty freaking incredible. Yes, retracements can be healthy. Correct. I mean, see, like this is what I'm saying. Like, people aren't stupid. We know that retracements can be healthy. We know that consolidation is healthy. It's just like enjoying the ride as we go higher because whoever's buying continues to want to send this much higher. Tess says Tesla headwinds were much different. I agree. Completely different from what we're seeing here right now. This is wild, dude, though. This is absolutely wild. By the way, my Palantir recap from earnings, I didn't get to put it out yesterday. It'll be out today. So after this market close, probably an hour later, you guys will see my full recap going through all the numbers. I finally got a chance last night to actually go through the deck, and these numbers were absolutely exceptional, to be honest. So we'll talk about that. And then it's Thursday. And then tomorrow, we're done for the week. So first week of February ending up. I don't think there's any other earnings tomorrow. Next week's a big one. We got Hood. And we have a bunch of other names. We have Hood, Shopify, McDonald's, Sony, Datadog, Reddit, HubSpot, Dash, Lyft, Upstart, Coinbase, Palo Alto Networks, Airbnb, DraftKings, Roku. So we got a bunch of them next week. Hood's obviously going to be a big one for me, but we got a bunch of them still coming up next week. This is wild. This is so wild. SMCI, yes, SMCI is next week as well. I made a lot of posts on Twitter about how a lot of income was from interest and that Palantir doesn't make money. Correct. A lot of their net income was from interest. It's like, yeah, sure. But it's like, that doesn't matter, right? I'm not saying it doesn't matter in the context of understanding the company. I'm saying that the stock's not trading on 73 million they got from net interest income. Like, no, whoever's buying Palantir doesn't care about that. And this is what I think everyone's trying to figure out. Like, well, what do they care about? And in my opinion, I think they care about having exposure to what they think is a unicorn that is going to get a bunch of tailwinds, either from the government or from Trump or Elon or from just general AI commercial growth. Like, whoever's buying it at these levels must be thinking there is something more beyond their price of sales, their net interest income, their PE, etc. Income is income. Yep. $1 is $1, baby. $1 is $1. But it's just wild, bro. It is just absolutely wild. Oh boy. Oh boy, oh boy, oh boy. Amit, what would have to happen for you to consider selling Palantir? Well, you know, if my girlfriend says it's me or Palantir, you got to pick one, I'm going to tell her respectfully that Palantir is
powerful as fuck.
And I'm going to have to pick Palantir. So, you know, I don't think there's anything here. I don't think there's anything here that really creates that. It's just, it is what it is. I don't know what you want me to say. It is what it is. It is what it is, bro. It is what it is. She's got to deal with it. She's got to deal with it. No, but in all seriousness, dude, I'm like, what we were talking to Sam about this. Like, why would you sell if you haven't sold yet, right? So, I don't know. There's just not a reason to me. And I don't know how hardcore the dip is going to be, if there is a massive dip, and I don't know how farther it could get, but it's one of the rides of a lifetime. Yeah, if Karp stepped down, maybe I would consider selling. But I mean, like, given my understanding of Karp, dude, he eats, sleeps, and breathes Palantir. Like, you know, Karp doesn't have a wife or kids, right? Like, Karp is giving up family for Palantir. Like, he never was the guy who was going to settle down and have some kids. Like, he is just constantly moving in action. He loves what he does. He's, you know, traveling. I don't know how many days of the year, but he's always out there closing deals, getting business done. Like, I think he's going to be 70 years old running this company. Like, what is Karp's net worth now? Hold on. Alex Karp net worth. It was 7 billion last time I checked. Now 9.2 billion. There you go. He's almost a deca billionaire, dude. Almost a deca freaking billionaire. It's a little bit of money. It's a little bit of money. So, yeah, dude, it is what it is. It's happening. It's happening. As Karp said, we're doing it. We are doing it. I mean, what happens when Anduril goes public? Do you think retail piles in thinking it's the next Palantir? Actually, yes, dude. I think there is an argument that people will treat Anduril the way they've treated Palantir. Will it create as passionate of a community as we have for Palantir? Maybe if there's an Amit of Anduril. Like, if there is someone who dedicates an entire YouTube channel and 4 years and thousands of videos to making content around the company, maybe there's a shot that there is that retail community. Because I think you need someone that is actually spending the time to care about the company. The problem is Anduril is not that hard of a company to understand, right? Like, the reason I was getting a lot of search volume back in 2021 is because no one knew what the hell Palantir did. I didn't know what the hell Palantir did. I was trying my hardest to make videos to try to figure it out, and I was still probably doing a crappy job, but it was a better job compared to the fact that no one else was doing that job. So everyone was just confused, but there was something about the mystique of Palantir that got you excited. For Anduril, they make weapons. It's not that confusing, right? So what is the mystique? What is the aura of Anduril that gets people as hooked and emotionally attached to it as Palantir? Nonetheless, I do think there can be a very strong retail community because Palmer Luckey is a rock star and he can inspire people and get people to listen. He actually knows how to communicate. He's controversial, which is good because it polarizes people and it makes people pick a side. And if you pick his side, then you probably support him financially. So I don't know, but it's got to be something. It's got to be something. But I don't know. It's just been an exceptional journey, and it continues to to do its thing right here. Alpha is still tanking. Yes, Alpha is still tanking. Oh my gosh, dude. I still don't really know exactly why. I know they lowered some guidance, but they really mentioned people don't talk about us anymore on TikTok, which is wild. That was one of their excuses. Elf right here down 24%. Amazon still down 4%. Where is NVIDIA? NVIDIA's down 0.5%. NVIDIA is down 0.5%. Hatred of JCal Aura. Yeah, do you guys want to listen to a little bit of this? I mean, JCal was talking about Palantir yesterday. Again, all of these people, dude, they can't get enough of Palantir. Everyone just wants to talk about it, and it's wild, but they are talking about it. They continue to talk about it, and they continue to try to analyze what the hell's going on right here. Magusto, thank you for the $5 super chat. Just take it easy and enjoy the ride. It was such a great day for Palantir. I was yelling on the beach. Where were you guys today when you were seeing Palantir get 110? Where were you guys? Besides being on my stream, like where were you guys when it was ticking up 108, 109? I was getting some work done, and then I just looked over and I was like, oh, it's running. It's actually running. In fact, I tweeted right when it got to 109 that it was running. And so it was at 3:24 p.m. I tweeted, and then I was like, let me go live early for the market close before Amazon. Little did I know 109 was just the beginning to go to 112 at the close. Mario says I was doing laundry. Tyler said I was driving my forklift. Samir said I was at work. Shem Pasta says I was in my cubicle. Working from home, working at the home office. In a bar, not checking. That's a good idea. It is just wild, bro. With my kids. Dude, it's crazy, bro. It is just so. I wonder the amount of time that you could add up. Like, imagine you counted the amount of hours you've spent looking at Palantir over the past couple of years, like just the stock price. It's got to be in the hundreds of hours over the past at least couple of years for me. Just like just staring at this thing. Like, and now we got triple digits. And it's much above into those triple digits. The big question is, do we see profit taking tomorrow? I say we do. I'll believe it when I see it, dude. Like at this point, I don't believe in the profit taking narrative because no one's taking profits. And what's your reason to take profits? And if you wanted to take profits, you already would have took profits after the initial earnings bump at 100, 101, 103. So, I mean, I want to see people take profits before I say there will be a profit taking, because as of now, I mean, like you either took your profits and you sold it to someone else, or you're holding. Or you continue to hold. 120 end of week. This is wild because we're treating price targets like it's a joke, right? Every dollar Palantir moves up, it adds $2.5 billion in market cap. And so if it gets to 120 from 112, that's what? Basically another $20 billion in market cap? A little bit more than that? I mean, it's just like, why not? Just at the end, Steve was right. Steve said it was going to be 150. So Steve was right. Oh boy. What's your view on NVIDIA over the next couple of weeks? I think NVIDIA pumps. I think this DeepSeek thing was stupid. And I think we pump. I think this is dumb. I think there's going to be plenty of CapEx. I think it'll be a blip in its trajectory. I think the market was a little fragile and scared of NVIDIA. I think the tariffs created a dip. DeepSeek created a dip. And I think NVIDIA ends the year closer to 170, 180. So if you assume 450 EPS, 40 PE, you get to 180. You could give or take 10 or 15 bucks, but I think we're much better on NVIDIA by the end of the year. How are 6 of the Mag 7s down and the Qs are still holding up? This is the craziest tech broadening I've ever seen. Well, you know, it's funny. Palantir is in the Qs and Palantir is up, maybe, you know, contributing to the Qs holding up, even though 6 of the Mag 7s, as you said, are down. So it's kind of wild. It's like maybe some of the money is rotating from the Mag 7s into Palantir as well, which is a potential thesis. I wonder where the money's coming from for Palantir. Is it coming from money market funds? Is it coming from people selling off other names? Is it, you know, like, is it coming from high yield savings accounts? Like where exactly is the fresh capital coming in to give this $50 billion in market cap in the past 5 days? I don't know. 40% year to date, correct. 40% year to date right now on Palantir. It's wild, man. Absolutely wild. But it's happening. And look, I think the employees and the insiders also know how crazy this is. I don't think they're just like sitting back and like, yeah, this is like our stock keeps going up. I think they're recognizing as well, okay, this is kind of wild, but they aren't in control of it. In fact, they've done everything they could to dump this damn thing at 45, at 50, 60, 35. Teal dumped almost $1 billion at 37. I mean, like, they've taken their profits, and still the amount of liquidity that has been deeply rewarded to Palantir. It's when it was at 35, I remember making videos of covering Peter Thiel and Karp selling 9 million shares this day, 10 million shares this day, 5 million shares this day. And I was like, guys, the stock's not going down, even though they're selling. So what's happening here? Right. And I remember those videos back in October, November. It was like, well, I guess someone feels there is a bigger future and they're buying. The question is, who is that someone? Was it literally just retail? Or was it funds that were just loading up on those sales and they didn't care because they just wanted more of it? I don't know. I really don't know, but it is something that's happening right now. My wife is talking about selling Palantir shares to buy a Porsche. We are getting divorced tonight. Look, I'm not saying divorce her, but I'm just saying a Porsche will never make you as happy as Palantir, in my opinion. Like, literally, a Porsche will be happy for like one day. And that's it. Palantir could keep going up, though. That makes you a lot more exciting. TJ bought 1,500 ELF. Okay, I did not know that. So TJ's getting into the ELF game, I guess. I tried to meet up with TJ. Dude, he's leaving on Friday. He's leaving tomorrow. We tried to meet up this week, but we couldn't make it because he was just busy doing a lot of stuff with his wife. But hopefully I can meet him in Texas when I go into the meetup. You've never been in a Porsche, Mitt? Is a Porsche even that cool? What does a Porsche even look like? Dude, this car is ugly. It's not even that attractive, bro. My Tesla looks prettier than this. My Model Y is cooler than this thing. Come on, bro. How much does a Porsche cost? $459,000 for a 2024 Porsche 911 GT3 RS. Come on, bro. Like, that's ridiculous. Granted, I'm not a car guy. I've never been a car guy. Thankfully, I have a Tesla, so the maintenance is so minimal compared to my other car, dude, on my Civic. I remember trying to maintain it. I was just like, I had no idea what I was doing with the car. Not a car guy, but Mitt's getting so much money he can hate on Porsches. Dude, the last thing I would buy if I was like rich, which you guys think I am, but I'm not. But if I was like rich, the last thing I would buy is a car or a watch. Car or watch. Not saying those are bad purchases, and if you love cars or watches, then be my guest. But just personally, I'm not into cars or fancy watches. And, again, I don't need a watch because the time is always now. Okay, so that's one thing. And I don't need a car because, like, FSD drives me. So, yeah, Karp doesn't even have his license, dude. That was so funny. What was that quote by Karp? He was like, I was too poor to get a driving license when I needed one, and then I became too rich to care for one. Now he has chauffeurs and all that stuff. So, yeah, I would never get a car or a watch. General Cody HD, thank you for the $10 super chat. Great taste in stock, bad taste in cars. Love you, Mitt. General Cody, thank you for being your brother. I just never been a car guy, dude. I never got into it. I don't know. It was never exciting. But I was happy I got the Tesla. The Tesla is just a joy to drive every day, or to have it drive me. But yeah, never been that into cars. Next options class is in 2 weeks. So like end of February. Remember when you said you never would fly first class? Okay, but that's different, dude. Now that I'm traveling more, I'm not going to first class. I'm not going to California in first class, by the way, but I wish I was, because first class is like, dude, like it just looks so much more comfortable. That I will pay for, dude. If I can afford first class in the future, I will pay for that, because it's just not worth 6 hours. Like I would actually pay for that. But outside of first class, that's the only luxury I would engage in life. That's it. The options class does not cost money. It's going to be a free live stream. There's already a live stream right now on my YouTube. I'll link it right here. It's just like a series that I'm doing to introduce people to the world of financial derivatives, which sounds a lot cooler than options. But yeah, it's not going to cost any money. Amit, would you buy a plane like Meet Kevin? Hell no, dude. That I'm beneficial. Thank you for posting it. That shit is not something I would do, bro. Even if there's a tax benefit to it, because he justified it with some tax benefit. Like, I don't know, dude. It's just a little bit of a, I don't want to say what I want to say, but it's not, I wouldn't do it. I would not get a private jet. That's not what I would do. If I get offered a flight on a private jet, I would take the flight, but I would not own my own private jet. That's a bit too much. NYC Urbanista says first their business is worth it. I agree, dude. I told you guys that the changing moment in my life is when I was on the India flight and we were coming back from India and I see this freaking 3-year-old in first class and I'm just like, come on, bro. A 3-year-old gets first class. Like, come on, this guy's he barely fits on the seat. He's on his iPad and I'm about to go to 37Z in the fucking back of the plane. I'm like, all right, I need first class. I'm tired of this. I need some first class. How depressing is it to be a Nets fan? I'm not a Nets fan. I just wear a Nets hat. You know, I actually got complimented on the hat the other day. The cashier was like, oh, I like those colors. I was like, yeah, I like these colors too. Some nice colors on the hat. Ray's getting me a jet. Okay. Well, enjoy it. Enjoy having your own jet. I don't know, dude. It's just a lot of money, bro. It's a lot of money to pay for something like that. Now, granted, Michelle, if Ray gets you one, that's his money, not your money. So you get to chill. Elf right here down 24. Hood's up a little bit. Again, Hood is having a investor call in person or like through video. So they're kind of replicating Palantir, which makes a lot of sense to me because these investor calls are so boring. And it's like, this is what a tech company needs to do, right? You need to constantly innovate, push it forward. You got a lot of people upset at SoFi and Anthony Noto's energy on the call. I mean, what would change that? Have a video call. But having a video call means there's more pressure. You have to have more excitement. You have to have a presentation. You have to make sure the audio and video works well. You have to get all the analysts to be able to have webcams. Like, you have to actually put in work to have a video conference call. And I really respect Palantir for doing it. And I really respect Robinhood for being like, yeah, we should do the same thing. Because like, everyone cares about our earnings. Our earnings matter to the world, where our stock is up like 7x in a year. Maybe we should tell the world how cool we are in video. So I think when you become a really, really mature company, or you're trying to become a mature company, and in the future, I do think big tech is going to change how they do it. Like, I think more and more of these earnings events are becoming important, and it would be special to do it via video. But it puts more pressure on you because now everyone's staring at you, right? So you got to be able to live up to it there. Miko, what's up? Amit, you are a king. Appreciate you for all the long streams. Keep up the great work, Miko. Thank you for being here. For those that don't know Miko, he is a 19-year-old who is deep in MSTR. And I met him at the meetup a couple weeks ago, and he got a bunch of his friends in his dorm room in college into MSTR. And I'm sure they're very happy to be your friend. Dude, if I had a friend who told me to buy something and it goes up like 7x, I mean, just like, that's like my best friend for life. You know what I'm saying? Like, this guy knows what he's talking about. So it's really cool to like be that young and tell people to like go do something when most 18-year-olds have no idea what buying a stock means. But it's a new generation, dude. Kids are moving fast. They're not waiting till they're even in their mid-20s to begin investing. They are starting as soon as they're out of high school or in high school and just getting into it. That's why you're my best friend, a bit. Yes, that's why we are best friends. That's why, you know, to be honest, I mean, you guys as a collective chat, I would say is my best friend. I mean, I have some good friends, but like, who do I talk to more? My best friends or the chat? It's the chat. It has to be the chat. Oh, Steve called me 50 minutes ago. Hold on. Let's see if he picks up. He called me during the earnings call. Let's see if he picks up right now. He might not. Oh, he did. Steve, what's up? You're on the market close.
Oh, no, I'm on my chair.
Dude, see, how do you want me to introduce you?
Well, I'm physically on my chair.
Do you want me to say, Steve, you are now talking to people listening to the market close?
I don't care. I just want you to be correct. I mean, I'm physically on my chair.
Okay. Let's start over. Steve.
I don't like when you're incorrect.
Well, I feel you. Palantir is at $112.
I don't want to discuss Palantir.
And so a lot of people have been incorrect about Palantir.
Yep, me.
Well, no, you said it was going to 125, 150. So
I did say it was 125, and everybody thought I was joking.
And if you wrote that Seeking Alpha article, you would be goated today.
I would be golden right now.
But you did not. You did not write.
But I didn't.
So, how do you explain what's happening with Palantir right now?
It's not worth talking about because you and I are going to disagree. You're going to say, I don't understand growth. You're going to come up with this cute little story about growth. But I understand growth.
Well,
I've been invested in Meta since the IPO. Trust me, I understand growth.
you pitch me that Apple's 1.86% growth is real growth, and that's why I think it's hard.
It is real growth.
It's a technical real growth argument.
It's billions of dollars of revenue growth. Billions.
Yeah, but it's
no, it's billions of dollars of growth.
It's not Palantir's type of growth. 36%.
You're right. Their growth is more revenue than Palantir generates in an annual year.
You know, you could put it like that. You could also frame it a different way.
Of course, I can put it like that because it's true.
Dude, it's potato, right? It's how you frame something. You know what I mean? And
well, no, because even though you're pronouncing it two different ways, it's still spelled the same way.
That's true. I actually messed up on that analogy. I actually just totally shit the bed on that analogy. But
yeah,
still,
you're gonna have to try a lot harder.
Oh my gosh. Okay. Anyway, what I'm trying to say is,
yeah, get to the point. I don't know what you're trying to say.
Dude, I don't know what to say either. This thing's at 100. It's 250 billion market cap. I don't know what I'm saying.
Can you just admit that we have reached levels that don't make sense?
No. It makes sense. It depends on how you frame.
Okay.
No, it's how you frame the sense.
Explain to me how this makes sense. And
So
I have until 7 o'clock because I have a board meeting tonight. So let's get on with it.
There's 5 senses, right? Smell, touch, hear. I don't know the other 2, but you said it doesn't make sense. It makes sense. It's a question of which one of the senses you use. And I mean, quite
You're
frankly,
not making any sense.
And quite
right
frankly,
now because your 5 senses have nothing to do with what Palantir does.
No, I'm saying one of the senses is see, right? And what's one of the reasons people stop believing in Santa Claus? They can't see it. I can see $112.15. And so from a sense perspective, when it comes to
Hold on
seeing,
a second. If I
it makes
buy
sense.
you presents and I send them to your house and you get presents on Christmas and I write from Santa Claus, you can see the presents.
Yeah, but if I don't know it's from Santa, then I can't believe
It says it's from Santa. You can see it.
Yeah, but I need to see Santa is my point.
But he comes when you're sleeping.
But that, so I can't see him. So I don't know if he's real. Palantir I can see. It's
But
112.13. I can
real.
see that. I'm like looking at it with my eyes. It's like it's better than the Mona Lisa. Like it's I can see it. You know what I'm saying? So from a sense-based perspective, you use the word, not me. You said sense. I'm using the same context. Sense. It makes sense. It depends on how you frame it, though.
No. Because when I say sense, I'm not talking about your 5 senses. I'm talking about explain to me how the valuation makes sense.
Okay, you didn't
or how
clarify
this
that.
makes sense.
You didn't clarify that. You just said
I
the word
don't need
sense.
to clarify. It's the context of what I said. I'm not asking you about your 5 senses.
Look, I'm not saying the valuation makes sense. I'm saying there's a world in which it could make sense based on how you look at it, and that's it. It is what it is.
And I'll agree with you. There is a world where it could make sense if it stops going up and continues to grow at this rate for the next 6 to 10 years. Sure. It can grow into it. Doesn't have to come down. But once again, I cannot stress this enough. No matter what company it is, Tesla, Cloudflare, CrowdStrike, Alphabet, Meta, the best companies in the world, high growth companies, at some point, they stop going up in a straight line. This was at $80 on Monday, okay? It's past 110 right now.
It's actually at 112.
Okay. Like I said, it's past 110 right now.
I'm just making sure you put some respect on Palantir's
Yeah,
name.
I am fully aware of where it's trading at.
Oh no, you said 110. I want to make sure you know it's at 112.
No. I said it is past 110.
I know.
didn't say it was
You
at
should have said
110.
past 112 to be a little bit more accurate. That's all. I'm just.
I'm using a generalization. You're going to debate me on a generalization.
No, I'm not debating. I'm just saying you said 110.
You're debating me on a generalization.
I think you should know the stock price of your favorite company.
I'm fully aware of where it is. Fully aware.
Okay.
So
in all seriousness,
what I'm saying, in all seriousness, at some point this is going to sell off. I don't know how much it's going to sell off. Maybe it only sells off to 105. Maybe it only sells off to 95 or 90. I don't think it's selling off to 50 or 60. I just don't.
No, I was saying that before you hopped on. I was like, I don't think it sells off to 50, 60. I could see 85 again, 75. I can see that happening.
But at some point, like, this is not going to 150 in the next 2 weeks, okay? They're not going to continue to add another 50 to 100 billion in market cap over the next 2 weeks. And at this rate, if it keeps going up like this, that's where they're headed. They are headed on a trajectory to exceed 300 billion market cap, okay? At some point, something's going to give. At some point, people are going to take profits. And at some point, this is going to retrace. How much? Who knows? But right now, we're at a valuation that is not justified by any means whatsoever. This is a company that in another day or two, if it had, I mean, what's the market cap right now after today's run up?
253.
253. So there is a world where next week we get close to a 300 billion market cap.
Yeah.
There is a world that I think that could happen.
It could.
At 300 billion, and you have to take their story out of it and just look at it. The amount of growth they need to justify where it is based on their profitability is non-existent compared to the companies that they will be adjacent to on a market cap level and how much profit they produce. I mean, at some point, this is going to end bad for people who are just getting in.
Yeah, if you're just getting in, look, I wouldn't buy right here. But the call option flow we looked at today also is pretty aggressive. And people
Of course it's aggressive. This has become a casino. This has become the stock that can't lose. People are making money. I want people to make money. I don't want people to lose money because losing money means it's taking food off people's table. But what I am saying is people getting in here, playing the momentum, they're out of their minds.
I'm not buying at 112. I get it. Like, I'm just saying that.
Well, you bought it 101 or whatever, 105.
Yeah, that was just, that was just for fun. But I'm like,
it's just for fun, but you still bought.
Yeah, but like you buy stocks sometimes for fun, but I'm not like.
No, you don't. You buy stocks to make money.
There are other reasons. Well, I mean, people buy stocks for a lot of reasons. And anything we've learned from Palantir is people are not buying it because of its price to sales, right?
Look, I have not run the new numbers after today, okay? But even at their projected growth rate,
it's insane. I get it.
At the end of 2027. It is still over 100 PA based on the consensus estimates and their trajectory and their margin. And here is where I think people really need to be honest about something, okay? Not enough people are talking about the criteria, and criteria may not be the right word, but the construction of their profitability. Now, if I was Carter, this is exactly what I would do. I'd be like, hey, Sean, these people are so stupid. Let's just issue 1 billion shares for a huge money grab right now and pad the balance sheet even further because interest rates are going to drop. That way, this gravy train doesn't stop. And I hope somebody from Palantir is listening to me because that is their best move because the majority of their profitability is from interest income. And if Trump gets his way and they actually keep bringing rates down, he wants rates at 2%, easily 2%. He would probably want rates where they were in his first administration after the pandemic because he wants a low-grade environment. This guy was a builder.
So Steve, this is such a bad argument, and I'll explain why.
No, you know what? Let me finish. If interest rates go down and they don't continue to add cash to the balance sheet, their EPS is going to come under fire.
So, okay.
It just is.
Let me explain why this is a horrible argument. Number one, this is where you got to get out of the macro stuff and look at the culture of the company. Palantir is 3,800 employees. If they raise $1 billion of a billion shares, which would be whatever, they dilute by $1 billion shares. Yeah, whatever
100 million shares, whatever it is. $1 billion worth of shares.
Yeah, that would screw over not only the investors, but also the employees. And there's only 3,800 of them. So when you talk about diluting the people in the company, that the company actually cares. Hold on, let me finish.
The shareholders every quarter, and just like Tesla, look at the amount of shares Tesla's diluted everybody with, and it hasn't mattered. There's a demand for it, and you don't have to do it all at once.
No, but again, so their dilution is for employee stock-based compensation, which is not as aggressive as what you're saying of just like raising $1 billion worth of shares. My point is here, they're not going to, they have $5.2 billion on the balance sheet. They don't need cash. Therefore, screwing everyone over would not be the smart thing. This is not GameStop or AMC where you just raise cash to raise cash and don't do anything with it. Number two, right now, the majority of their net income is from net interest income, but their operating income margins went from 39% to 45%. What do you think is going to happen to operating income over the coming quarters as they scale and grow their top line revenue? That net interest income is significantly going to decrease compared to
how
their
much
actual
revenue
operating
did they generate in Q4?
How much what?
How much revenue did they generate in Q4?
828 million.
What was their net income?
So they had a SARS hit. I believe the net income was 72 million, but it's because they had to pay 130 million for the SARS. So it would have been closer to 210 million, if I'm not wrong.
Okay, and how much net interest income was there?
I think 33% of their net income was interest income.
Exactly.
Yeah, but my point is if they're growing and rates come down, which you're saying it'll come down by 50, 100 basis points, that's not going to matter. They will be able to get money out of their customers, not from treasury bonds.
They're going to have to outgrow their loss on interest income.
Well, yeah, of course they're going to have to outgrow, but that's the
which
whole point.
they can do. But if rates stay the same and they keep growing at this rate, they're going to generate even more EPS. All I'm saying is that they should be issuing more shares to offset the decline in rates as rates decline.
That's a bad idea because it would screw over investors, and I don't think they would do that.
Not a bit. There's obviously demand for the shares at this price.
Yeah, but that just pushes the stock up, which makes people rich versus diluting people by the tune of what you're asking for. Like they don't need the money.
Tesla didn't need the money either.
Well, Tesla actually has expenses, like real expenses. They're an auto company. Palantir is software. They have expenses, but it's not like building a car. They have 5.2 billion in cash, no debt. They don't. If they're growing and their operating income margins are growing, they're not going to need net interest income. Is my point. There's banks that are going to need, like SoFi would love to have some higher rates for net interest income, but I get your point. Your point is, hey, the only reason they're profitable is because of the balance sheet.
It's not the only reason. I'm just saying
it's one of the reasons.
It's a significant reason of their profitability.
Well, so that's where I disagree. It's not significant to me. It is significant in the moment, maybe, but it's not going to be the reason the company becomes profitable for the next 10 years. And
it's not going to be the reason. It's not going to be the reason they stay profitable. But a large amount of their profitability has been made on net interest income.
That's been since May of 2023 when they became GAAP profitable.
And at some point that won't be the case, but it is still the case. Regardless, even if they keep growing at this rate, they're still going to be over 100 PE in 3 years from now.
Yeah, you're right.
They are so high on the valuation. And while my argument did not really stand up because it was more theoretical 2 or 3 weeks ago, now comparing them to Salesforce is real. Now comparing them to Cisco and these other companies is real about how much profitability they generate. This company is on track to be bigger than Pepsi. They may even be bigger than Pepsi right now. They're bigger than Coca-Cola. I think Coca-Cola is only 220.
Let me ask you this question. Let's just assume for a thought project, hypothetically, it's not retail that's buying. What happens then if it's not retail that's pumping this?
You don't want that answer.
Why?
Because it's going to 150 to 175.
Well, no, I actually love that answer. I don't
Look,
I don't hate that answer.
If this is not retail, okay, if they actually have real institutional buyers at these levels, you're going to create a new floor. And in order for something to go down, you need more sellers than buyers. If there's more buyers than sellers, and because people aren't selling their shares, this is going to keep going up.
Well, so what
Because
if that happens?
It could. Look, people can, the same way you can set a stop loss, you can set a trigger to sell at a certain price. People may have triggers set at 120, 125, 130. So this could keep going up and get bid up if there's more buyers than sellers. This could absolutely happen if people don't sell. So the valuation may not matter in the short term. Eventually it's going to matter, and eventually this is going to retrace. How far that retracement is, who knows? But it's not staying like this.
But see, even the thing is, so if you think I'll give you 65, even though I know you said you don't think it's going there. Let's say it does.
I don't think it's going to 65.
Okay,
I think,
80?
70, 75 is a stretch at this point.
So what, you think it goes back to 80?
I think 80 to 100 would be a realistic pullback. I don't want to be that person saying, oh, it needs to go back to 40 because it doesn't. I mean, if it goes back to 40 at this point, something's really wrong, especially with the potential with Amazon and everything. Like, look, this company's got a ton of potential. I don't think it's going back to 40 or 50, but I don't think it's staying above 100 indefinitely. I think it's going to pull back before it makes the next tear run.
So again, I think that's the thing here. If it pulls back, then no one's really that upset.
Long-term holders aren't upset, but people that bought at 110, if it goes to 85 or 90,
But
are going to be
that's,
upset.
again, those, I'm not responsible for those people. I mean, if you buy
You're
at
not
all-time highs,
responsible for anybody. All I'm saying is that I'm worried for the people that are buying here, not people that have a cost basis of 20.
dude, if you're buying here, you have your own rationalization for it, and it could be
somebody's buying here.
Well, but so that's my point. That's why I asked you my question, which is, what if it's not retail? What if it's
it can actually go higher, and the valuation can get even more stretched. But once again, we've seen how this story plays out time and time again. And every time we get into these situations, everybody says this time is different. In 2021, everybody said this time is different. And at that point, the big companies were generating profits hand over fist. And granted, there was a SPAC bubble and there were certain things, but Apple was still generating over $90 billion in profit. The Mag 7 were still generating profits hand over
the
fist.
difference 2 years ago was we were raising rates.
Just hold on. You go back to the 90s. You go back to any other time in history. At some point, it sells off. Stocks don't just go up in a straight line. This is going up in a straight line. This is up over 500% in the past year. At some point, it's coming down.
I'm not disagreeing. I'm saying it could come down at one point, but if we assume, which by the way, we added 50 billion in market cap, right? Let's just assume, which I think is
and think about that. You just add 50 billion in market cap, and it does. What was their revenue this year?
Hold on. But before you even go to that, listen to what you're saying, Steve. It added 50 billion in market cap. You honestly are telling me people like me and you across the globe have $50 billion to pump into the stock. That's what you're telling me.
Well, I'm going to ask you a question. How much money is staying in money markets?
Well, I'll ask you a counter question to that. Do you know how much institutional money is sitting in money markets? Because it's 4.
Yeah, it's about like 3.7
No,
trillion.
it's 4.5 and retail is like 2.5. So
okay, so 2.5 trillion in retail, and you're asking me if retail has $50 billion to put in the Palantir.
Steve, most people don't even know what Palantir is. It's not Nvidia. It's not Amazon. It's not Tesla.
I'm just saying. There is over $2 trillion from retail sitting in money markets.
That doesn't mean
You asked a question. I gave you an answer.
I know. My counter answer, that doesn't mean that money is allocated to Palantir. In 5 days, 50 billion came into Palantir from you and me. Like, I'm not buying that.
I'm just saying.
You're not even buying that. I can hear it in your voice. It doesn't sound realistic.
If it's institutions, it can certainly go higher. But at some point, people are going to sell. Like, you don't invest in companies not to make money. At some point, you're up 10, 15x. I mean, People are going to take profits at some point.
Dude, people were telling me in my chat today they've been taking profits. Like
So-
people are taking yeah, of course.
All I'm saying is that this is getting to the point where it just, this is one of the most overvalued, if not the most overvalued company in S&P at this point.
I mean, look, the valuation's up there. I'm not going to disagree with that.
And it's hard for me to see a path to 150 here in the next couple of months. Not saying it can't happen, but I think more realistically, it comes back to 80 or 90. Because I don't think this is something that's going to stay sideways.
Do you I mean, I think you have a board meeting, but Amazon, any thoughts on them at all?
I can do a couple minutes late. I mean, they can wait for me. It's for my building. It's not for work. So
Okay.
They can wait for me.
They missed a little bit on cloud. They're down 4%. They're spending.
Oh, the same story about Google. Oh, we missed on cloud. Oh, yeah, okay, cool. Anybody, whatever. I wrote an article about Google, about how ridiculous the sell-off was. You can see it tomorrow. I'm not going to go into it. But Amazon, the miss that everybody's complaining about, get ready. Get ready for the amount of net income and free cash flow they generate over the next 3 years.
You know how much they're spending on CapEx?
$104 billion.
It's a lot of money.
And what I say, Jassy has the potential to come out tonight and say, "Hey, Nadella, hold my beer. Check this out. We're going over $100 billion," and he did it. So now you got 100. Let's just use easy numbers: $100 billion from them, $85 billion from Microsoft. So you got 185 between the two of them. Sundar came out with $75 billion, and then Zuck came out with $65 billion. Do we not think NVIDIA is going to the moon this year at some point?
I do think NVIDIA is going to 180 by the end of the year.
I mean, it's going to be pretty hard, especially since NVIDIA has been consolidating since last quarter, and last quarter was incredible. So it is amazing the amount of CapEx that's being spent, and next year could be the same, if not more. We could have another 2 years of this insane ramp, because they may not be done.
Yeah, I think there's a world where they were CapEx guidance was 25% higher than what the street thought. Like
everybody came in with higher guidance on CapEx. Everybody. And I don't know that it stops, because as long as one person spends, they all have to spend.
I have Brent Thill on CNBC. If you got 4 minutes, you want to hear him and his take on Palantir. If not, you can leave.
I mean, I maybe
you're probably gonna agree with him anyway.
Is this who is it? I don't even know who this is.
This is the Jeffries guy who upgraded us from 28 to 60. But
is it? Yeah.
No, it just came out like 5 minutes ago.
Oh, then yeah, I want to hear it, because wasn't he saying it's like it should be 60?
Yeah, okay, that's 4 minutes. Let's hear this. Then we'll end the stream after this.
Guess thinks the clock could be about to strike midnight on Palantir's Cinderella run. Jefferies Managing Director and Senior Software Analyst Brent Thill joins us now. Brent, great to have you with us. What's so amazing, Brent, is that you have a lot of company in the analyst community in terms of not having a favorable view of this stock that has gone gangbusters. There are 13 hold ratings on the stock, 5 sells, and only 5 buys. Why so skeptical? Is it purely valuation?
Yeah, look, we're wrong and we get things wrong, but I think a lot of our other picks have been right. So I point to Palantir's fundamentals. There are very few companies that are doing what they are doing. So to give them credit, their fundamentals have been pretty incredible, right? 30% top line growth, high margins. So the rule of 70 to 80 is in play. There are very few companies. You look this week, Google, Microsoft, Amazon, all disappointing on cloud. Where's the AI? And Palantir is saying, well, we got the AI. So I think ultimately right now, what's helping Palantir, great fundamentals on their behalf. Secondarily, there are not a lot of institutional investors. I've said this, I do not deal with retail investors. Our clients are institutional investors, and the institutional community is not there in big size. So is that a catalyst? Potentially. I think you go back to the third element is everyone else is not doing well in tech right now. And so ultimately, this is giving Dr. Karp's view of, hey, everyone else sucks and we're all amazing pitch hold weight. And so again, I mean, we're at a point right now where the stock is in la la land on multiple. There's nothing anywhere remotely close to this. Our team, has been advocating there's better ways, safer ways for investors to own these themes around AI, whether it's security and CrowdStrike or Cloudflare. You look at other stories, but when you start to look at this market cap, it's the market cap of Palantir is the combination of Adobe and Snowflake combined. I mean, we've never seen a multiple like this, and I can just give you history when Snowflake, Datadog, and others hit this multiple back during COVID. They didn't hold that multiple, and it was not a good story on the other side of this mountain. They all imploded. They went from 50 times revenue to Snowflake went to 8 times revenue. So again, we're not saying that happens short term. There's enough momentum and enough goodness in the fundamentals. But I think again, we have to look at it both from the fundamentals, A+ valuation. Again, nothing even remotely close to this valuation.
Yeah, we've been making the same point, Brent, and thanks for being here. And I'll say this, even if you give them, add the $5 billion of cash they have and say they're going to do $5 billion of revenue, make that 10, and then divide it by 230, it's still a ridiculous valuation. So my question to you is, what will be the trigger that says when the street finally says this doesn't, because as you said, we've seen it before. So what are we waiting for? What do we need to see for that trigger to be sort of, I guess, set off?
Well, I think there's a trigger ultimately in the multiple at some point, right? Again, it's gone from 25 times revenue to 50 plus. So, could this go to 75 times revenue? It's in the stratosphere, and it's launched and it's there. So the multiple could keep going higher in the short term. I think the fundamentals are good, and at some point, are they going to have a miss on the quarter or not? I don't see anything really competitive that's causing a big issue. And I think the only thing right now is, the rest of tech is kind of sick. You look at the mega caps, even Amazon, again, we're 3 for 3 this week of not making the numbers. And so ultimately, I think there's, some concern around what's going on with the rest of tech.
Your thoughts, Steve?
Oh, I don't know. I mean, I don't know. Look, the valuation's ridiculous. I don't know what to say.
I mean, seems kind of salty. I'm just, like, I get it. I get his argument. I get it. Obviously, he's making the same argument you're making. But
yeah, but I'm not making it in a salty way. I'm saying that I'm happy for everybody that's made money, but I think people that are buying here, because obviously people are buying here, it may not end well for them in the short term.
yeah, I mean, that's possible.
I mean, it's just, this is getting to the point where I think at some point, here's what's the alternative. This goes to 130, and then people start selling and drags it down, and then other people are like, damn, it was at 130. Why didn't I sell there? It's at 85 or 90 now. I mean, that's a significant drop. So, look, I don't know. I can't predict where it's going to go or what it's going to be, but I just think that there is the amount of growth that even if they're sandbagging and they're putting up 40% growth next year and the following year and the following year, it doesn't get you to a revenue and a free cash flow and an EPS number that makes any sense to pay, especially when there are a lot of other companies that are growing at great growth rates and are way more profitable. I think that this is running its course. It can get more ridiculous, but I think we're starting to get to the end of the ridiculousness. At least with it going up.
Sure,
it could stay here. It could stay here, but I don't think it's going to 125 to 150 before next quarter. And I mean, realistically, I would not like to see it hit that for quite some time.
My take is that I do think this is institutional money coming in. And so if it is institutional money coming in, I think it can get to those levels. Would it be justified there on the growth rates? Probably not, just like it's not here. But as you said, momentum can drive this narrative. The other thing I think that guy's really upset about, if you saw his previous interviews, is that he doesn't like Karp. And he doesn't like that they don't respond.
That's a dumb reason. That's a dumb reason.
But this is my point. Like, it was $28 going into the print yesterday as price target. Like, you can't logically tell me you go from 28 to 60 off the earnings we got. The earnings were good.
I mean, I wasn't even at 28, and I'm a stickler when it comes to the numbers, and I wasn't even at 28.
So that's what I'm saying. Like, the level of, and Josh Brown said this perfectly a couple of months ago, right? Like, creativity is needed when understanding a tech company. And I get the pushback will be, well,
yeah, I get that.
Well, you need a lot of growth for that creativity to materialize. But that's why people are buying Palantir. They think the growth is going to be there. And if Palantir puts up the growth like they did in Q4,
but that's the thing, the growth is going to be there. It's just, does it justify where it's at, and how much harder does it make it to climb? This is a company that's going to grow at double digits on revenue for the next 10 years, most likely. Nobody's saying that this company is going to stop growing.
So what if over the next 10 years it just trades at a ridiculous multiple and they prove the growth? What is anyone going to say 10 years from now? You know, like,
listen, people have said that Amazon and Tesla has been overvalued for God knows how long. Not really Amazon these days, but Tesla, a lot of people still say is overvalued. It's been a decade. People have gone broke trying to short it.
well,
I mean,
so that's my point. It's like, if it maintains that multiple,
this could be a company that doesn't play with the rules.
That's exactly what the thing I think is the Jeffries guy doesn't understand. At $28, Palantir never played by the rules. At 120, they're not either. So
yeah, I mean, listen, who knows where this goes? The bottom line is, I wouldn't be buying here, and anybody who's buying here, I don't think they understand what they're buying or why they're buying. I think they're just buying to ride the momentum, and they probably have a stop loss $5 or $10 under where they're buying, because why weren't they buying it at the beginning of the week? Or why, like, this was not a groundbreaking quarter. The groundbreaking quarter was the AIP quarter and then the following quarter. There was nothing groundbreaking this quarter. So I think the people that are coming in now they probably have no idea what they're buying.
Well, we'll take a look at this. This is what Steve Quirk just tweeted. He's the chief brokerage officer of Robinhood. He said, in contrast to last week's dip buying, a balanced buy-sell ratio indicated that traders were beginning to sell off to protect their portfolios this week. As we've seen in other volatile markets, our customers continue to trade stocks in the AI, EV, and tech sectors. I think there's a world where if retail is net selling, and Robinhood's a good indication of retail when it comes to Palantir, as Steve Quirk just said, there's a hell of an argument.
Buying.
No, my point is there's a hell of an argument that big money's coming in.
Yeah, but that's what I'm saying. Institutional buying, man.
Yeah, and again, I think that's the only way I can explain this price action, which is why I don't think we have to come back down to 70, 60 bucks.
No, and I don't think 60 is realistic anymore. I think it was realistic at the beginning of the week before the pop. I don't think it's realistic anymore. I think a realistic sell-off, I'm going to give myself a wide range. I think a realistic sell-off or retracement is anywhere from 70 to 90 because it's just too volatile. You don't know where it's going to stop. But I think it would be very hard-pressed to get below 70 at this point.
I agree.
So I do have to go. I will call you later tonight.
Thank you, Steve. We appreciate you. Talk to you later.
All right, later.
Later. Dude, what a story. What a story. We are going to remember this a year from now, 2 years from now, 10 years from now. All of us are going to remember we were trying to figure out at 7:12 p.m. Eastern on a freaking Thursday what is going on with Palantir. It's just crazy, bro. Absolutely crazy. Again, my take here is I think big money's buying. And if big money's buying, this thing doesn't have to come down. It's just that simple. Could it come down? Sure. Could there be more buying opportunities? Sure. Is there macro volatility that could create a downturn? Absolutely, that could happen. But does it have to? I don't think so. Especially if a lot other bigger investors are getting involved. Nonetheless, this is what we got going on. Congratulations to everyone. New all-time highs on Palantir. She's a triple-digit stock. And she's changed a lot of lives. She's definitely changed my life. And she put us through some pain in 2022 and 2021, as they all do. But at the end, they end up giving us some joy if you stick around long enough. And it's been pretty incredible. Pretty freaking incredible. All right, I think that's it for me. Davis says I better not end the stream, but I have to end the stream because I have to go get shit done and maybe sleep early today and not at 2 a.m. again. She's so pretty. She's also so pretty, dude. Oh my gosh, she's beautiful. She's drop dead gorgeous with those triple digits. Absolutely gorgeous. All right. So what else? So we'll be back tomorrow on Market Open. I don't think TJ is going to join us tomorrow because he's traveling from New York. So I don't think he'll be on tomorrow. I'll hit him up though. Maybe he's free in the hotel and he could be on. Yeah, that's pretty much it. Palantir Weekly will be fun this week. That'll be very fun. Palantir Weekly, 11 p.m. I'm sure we'll have a very fun discussion about what the heck's going on. And yeah, that's pretty much it. No Sunday future show this week either. I'll be on a flight. I forgot the Super Bowl is this Sunday, so I'm going on a flight this Sunday, and heading to California. So yeah, we will have the Monday Market Open, and then next week we'll be live pretty much every day. I mean, there will be 1 or 2 days where I don't think we make the close, but outside of that, everything else will be there. Yeah, I'll be getting the Super Bowl results maybe when I land in California, but this one I'm missing this time. I don't think the internet's good enough to stream on the plane unless United has the Starlink. I don't know if they have it yet though. But so Colt said, first time I'm watching live from my Tesla. This is neat. I love it. This is great. Awesome, awesome, awesome stuff. Thank you everybody for being here. When are you coming to LA? Hopefully in the summer or maybe in the fall. Not going to be for the next couple months, but we will be going to North California next week. Again, if you want to sign up to the sheet to get notified for that, it is in the description or in the chat. And yeah, we'll be back tomorrow. And that's it. All right. Thank you, everybody. Hopefully you all enjoyed. Congrats, all-time highs on Palantir. We are pretty much done for earnings this week. And I'll be back tomorrow on the Market Open. All right. Love you guys. Bye, everyone. Have a good one. Good night.